Good morning. Good morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Wednesday, the 27th of December. A reminder I will be out on Friday visiting with my sister and mom down in Jacksonville. I'll be there Friday, Saturday, and come back on Sunday. Just going to be down there a couple of days to see my mother before she goes back home. My sister and her just came back from a cruise on Royal Caribbean. They spent 10 days down there, had a good time, I'm sure. I love cruising. I love the cruise, especially Royal Caribbean. I've been on Carnival, I've been on Norwegian. Carnival by far, it's more expensive, but it's a much better outfit. All right, so currently on the screen, I'm looking at Tesla. I had a question from Shannon, one of our members, about where do I think Tesla's going? Well, we don't have a crystal ball, but just based on price action and the odds, we can see the 9 and 21 day are trending up and to the right. Price action's been respecting those two moving averages since the second week of November. We put in a higher low, and since then, all the moving averages, even the 50, if you look closely, you can see the 50-day is starting to show a little hook upward. It's still moving lower, but the 200-day, that dotted line there, that 228.12, that's starting to turn. So Tesla's most likely headed back to the highs. Now, will it go straight there and trend like it's doing right now? I don't know. I'd be watching RSI. RSI has been moving sideways, which pretty much tells the story of a grind, strength of trend, versus this more steep incline over here in August, where we ran up quite a bit from 212 to 278, over 60 points in 4 weeks. Okay, this time we got like a grind higher. Volume shows that institutions have been picking up shares, so that's a good thing. Since November and December, we can see elevated volume. Obviously, there's some red in here too, but mostly green. And with the moving averages being respected, MACD above its signal line, stochastics turning back up in the second week of December. Now it's back above 80. You can see that ATR is dropping. This is ATR in the second to bottom panel. That's dropping. That's just telling you that the ranges are getting tighter and tighter. So I'd be watching for that to turn up as well. On Tesla, let's see what the FANG stocks, the 10 FANG stocks that we follow. We pay attention to these 10. This is the New York FANG index. A lot of people talk about the Magnificent Seven. I have a feeling that excludes Netflix, Snowflake, and Broadcom. But if you add those three in, you got the New York FANG index, which is a good index to follow if you're trading these 10 or any one of these stocks. You want to pay attention to this particular index, the New York FANG index. Okay. Yesterday, we put in a nice bullish candle. Okay, and you can see the nines on here. That's just showing you that since October, we ran up 9 days, paused for one day, ran up another 9 days, paused, consolidated, moving lower back to the 21 day for 9 days. Then we rallied again for 9 days over the December period. On day 10, we put in that red candle. And for the past 3 days, we've just been kind of grinding sideways to upward. So is this the start of another 9 days up? I don't know. I don't know, but RSI is up there near 70. We want to see RSI move back up, showing strength of trend. We don't want RSI to start to drift lower like it did over here when we consolidated back towards the 9 EMA. Excuse me, the 21 day for those 9 days. All right, so we want to keep an eye on RSI. That's strength of trend, the way I use it. MACD and stochastics look good. Cats are fighting. You two stop it, okay? I'm broadcasting. They're playing, actually. All right, they're playing. All right, so watch the New York FANG index if you're trading these 10 stocks. Okay. New York FANG index. Tesla, we'll keep an eye on Tesla. The S&P is moving lower at the moment. Let's go look at the S&P. Spiders are drifting lower. The futures just dropped off. Let me get something running here. We got 3 minutes to go. 3 minutes to go. Very quiet. Very quiet. Everybody's on vacation, or many people are on vacation. All right, we've got less than 3 minutes to go. We are drifting lower. We had Redbook sales come out at 855. Redbook year over year was at 4.1%. Richmond Fed is at 10, and we got a 5-year note auction at 1 o'clock. Other than that, there's not a whole lot going on this week. So the Houthi rebels are giving shippers problems in the Red Sea still. All right, so okay, New York FANG index. Let's keep an eye on SPY as we open. We'll be open a little bit lower. We're currently off 24 cents. 2-3 handles on the S&P. Okay. The FANG stocks, we have 2 out of 10 red. Microsoft's off 96 cents. Apple is off 67 cents. Everything else is up. Tesla's up $1.56. Okay, we're about to open, folks. About to open. Okay, get ready to take some profits off the table. Okay, yesterday we had like 3 billion to sell at the close. The markets moved a little bit lower, but now we're starting to rally again. Maybe we get a nice little pop here. Watch the S&P. It's a little early to take any kind of directional trade, but we might get a bounce here. Could also move back into yesterday's range. So generally, I don't like to trade in the first 20 to 30 minutes. I mean, I'm looking for the odds to be in my favor. So if I see a trend and RVOL is moving higher on a particular stock with VWAP up and to the right, I'm looking for bullish trades. There's no hurry. I know what sectors are in play. SOXL is in play. SOXL, semiconductors 3 times. Tesla's going. Tesla is going here. Tesla is going. 260 is call wall resistance until it isn't. Tesla's going. 260 is a level. All right, there goes Tesla. All right, let's keep an eye on Tesla. All right, semiconductors, a little dip there. Oh, you know what? I just noticed. Look at RSI. turning up sharply. Let's see if this continues. Tesla. NIO was a big one yesterday. NIO, little gap down. If you're interested in NIO, you're getting a gap down right now that perhaps will be set up for you. We hit the 200-day. Okay, that's probably going to get bought, I would think. Watch NIO. Watch NIO if you missed it. Dip buyers are welcome. Okay, we're getting a little bounce here in the S&P. Tesla. Like I said, I generally don't do anything the first 15, 20 minutes. I'm watching if this is sustainable or if they're just going to continue to take profits and fade the market. All right, VIX is back down to 1290. VIX. All right. Wow, look at these stocks rip here. Meta. Oh, yo, yo. Watch the rips here. Google. So far, so good. All right, watch here. Looking good. Mm. Tesla, Netflix, Amazon, Meta. All right, nice little pop there to take some profits off into strength if that's your desire. Take the rest of the day off. And looking really nice here. Okay, this is my son's account. I just want to check it out. You can see that he started the account over a week ago at $1,000. We're doing credit spreads only until he learns this technique. So presently, we got credit spreads on AMD, Tesla, and DoorDash. Okay, you can see these are all green, telling me that I'm making money on those spreads. The one that was concerning yesterday was DoorDash. Okay, let's look at AMD. And what I'm interested in is simulating his returns over time. Here we are right here at 145.20. You can see that he's in a profit since he got into this position. Was it yesterday? And this continues to move higher. So he went into this spread, I think, I forget exactly. What did we do here? He went into a credit spread for 58 cents. All right, so 58 cents. Plus, it had a lot of premium in it in terms of implied implied volatility. So maximum gain for him will be $93, which is good. You got the premium and the implied volatility deteriorating theta on top of the spread, which he got up front, $59. So not bad investment for his small account. So this is more of a small account strategy. Looking to grow this account, double it by hopefully by the middle of January. I think that's very probable, given he has me helping him out, showing him the ropes. Okay, the additional trades, we have Tesla. Okay, Tesla for him. He has the same trade I have on Tesla. So simulating his trades, you can see since we entered this last week, the max profit on this one will be $87. So that looks good. He entered this one a total credit of $55. So on top of the $55 credit, he's going to get a nice return with theta deteriorating in the options as well. All right, this looks good. And DoorDash, which was a little bit of a problem yesterday, that was showing a bit of a loss on the credit only. All right. So right here at 100, we're starting to get back to making a profit. As we move higher into expiration, he can make up to $136 on that. It more than likely will. Okay, so that looks pretty good for him. Just doing credit spreads for my son as we grow his smaller account. This is a trading account. I have a Coverdell account for him too, for his college, but that's, something that they don't get to touch. It's just an index fund, basically. So if you like the idea of credit spreads, I would advise looking at Invest with Henry on YouTube. He's really good. He's a young guy. He started his account with $2,000 about 9 years ago. He's got it up over 2 million now, using different techniques like credit spreads, butterflies, iron condors, you name it. He's doing a great job educating on it rather than redoing all the videos. I think I stumbled upon him so I could show my son through another person's perspective the same information. That was very helpful for him. He understands the idea of delta. If you're going to flip a coin 10 times and you can be assured, or based on probabilities and based on, in this case, option pricing, if you can assure yourself that you're going to get heads 8 out of 10 times, I mean, that's a pretty good probability, right? Same thing with options. If you can use delta in your favor, selling a 15 delta, that means there's an 85% probability the person you sold it to is not going to be profitable. You will be. 15% of the time, that person will be perhaps making some money, whereas 85% of the time you are. I like those odds a lot better. I do it because I've been broadcasting, I've been focused on blogging and stuff, predominantly. Been doing credit spreads for a long time. I just started sharing with people because they were interested. I just like it. There's Meta. Meta looking a lot better here. Meta. Anyway, but hope everyone's having a good day. I got Meta pushing higher. I got a credit spread on Meta as well. Any of these trades that I'm talking about. Okay, so here's the deal with Meta. All right. So I want to do a credit spread. I mean, even if you take a credit spread today, just you use maybe a little bit more time. I have the January 12th Meta options. Okay, let me just scoot this over so I can see it. Okay, I want to see what strikes I have here. Okay, Meta, I have the January 12th, 245, 240. 245, 240. Okay, so here's Meta. Let me just go through this real quick. So if you were thinking about taking a credit spread, first thing I would consider is what is the market doing? Okay, so let's take a look at the market. So if I'm going to take a credit spread and I want to be bullish, I want the trade to be bullish, you can see that the S&P is trending higher. Now, what's the probability the S&P is going to drop back to the 9 EMA? Well, it could. It's trending for the time being. So right now, the 9 and 21 days say, okay, look at bullish trades, look at dips to buy. All right, so that's the first step that I usually look at. Then I look at the 60-minute. Okay, I'll look at the 60-minute. If I'm above the 20 EMA and it's trending, I want to be bullish. I know that there is a likelihood that we could come down and test the 20 EMA on the 60. It's trending. You can see it respects this 20 EMA. So is it a guarantee? No, but it's a pretty good probability that the 20 EMA is going to find buyers. We're above the 20 EMA a little bit, and it's trending higher. So basically, I'm bullish on the markets. Okay, so now I look at Meta. Okay, here's Meta. I can do the same thing with the daily and the 60-minute chart. So the 60-minute shows me this trend. Okay, now I could use a number of different ways to figure out where my support and resistance is, but one of the best ways I think is to use the Bollinger Bands, because you know that Bollinger Bands by design contain 95% of price action. So on the 60-minute time frame, I can see that 350 is a pretty decent level to be support, and resistance probably 358, just above the upper Bollinger Band over here. So on the upside, I got 356, 357, 358. And on the lower end, 350 in the short term. So if I'm going to sell this 2 weeks out, I probably want to go out a little further. So let me go to 2 hours. That's consolidating. All right, let's go to the daily. Let's just do the daily. Get this over with. All right, so I can see the 20 EMA is right there at 335. Where's my put? 345. I sold at 345 right here inside of standard deviation 1, the gray area. So with this trending and RSI grinding higher, we'd need some sort of shock to bring this back down dramatically. So I feel pretty safe about the 345. So let me take a look at the 345. The next step would be, let me look at the 345 on Meta and see what the um, delta is. So let me take a look at Meta puts, and I want to look at, I want to go out to at least January 12th. Let's go to January 19th. That's 23 days. Okay. All right. So 345 would be a delta of 27. So I probably want to go a little bit lower. 340. 340. Okay. I have 345s now. That's interesting. Oh, that's the 19th. That's why. So let me just look at the ones that I have because I'm double checking myself. 345 is currently a 24 delta. All right. So I got a 24 delta on the 345. So there is so it's about a 1 in 4 chance that I'm going to have to manage this position more aggressively. 1 in 4. Okay. So I really want to get that closer to, say, 17, 15 to 17 delta. So if I can get a 17 delta, that would put me down here probably near 340. Yeah, so 340 is a 15 delta. And for January 12th, that option is $2.18, $2.20. So that's a pretty decent premium, $2.20. So I'd want to take a strike below that, buy the option below it. So if I sold the 340, I'd want to buy something like the 335 for protection, or maybe a little lower. Okay. So ultimately, I'd want to try for about $1 to $1.50 or higher in premium credit to me. Now, the other thing is about Meta, you can see that we've got wicks up high up against the upper Bollinger Band. So we are grinding higher. So I need to be conscious of the fact that we could pull back to standard deviation 1. That would be 347.50. So that would be, if I could get an entry there, that would be even better. So generally, what I like to do is if I'm going to I already did my homework on Meta. What I want to do now is wait for a dip because I don't want to buy it. I don't want to sell a credit spread as it rips higher. So right now we're getting a dip. So that's actually a pretty good thing. for Meta. Okay, so you want to check the daily, you want to check the 60-minute on the S&P, okay, or the Qs, whatever you're trading. Then you want to check the 60-minute, maybe you check the Bollinger Bands for support and resistance. And then you want to look for a delta that's about 17 to sell. Give yourself 2 weeks to 4 weeks in time and look for a dip so that you're selling on the pullback rather than selling at the high of the day. So if you just do that, it's pretty straightforward. Check the daily on the S&P, check the 60, check the daily and the 60 on your chart in question. I like to sell liquid options on the FANG 10. Those are pretty liquid, and the premiums are pretty decent too. Plus, the spread is pretty narrow. So I'm looking for spreads that are like maybe 10, 15 cents at the most, not $2 or $3. Obviously, if it's a spread of $2 or $3, you want to walk away because you're going to get too much slippage and you'll wind up, putting risk on and not getting the benefit of the trade setup. So trade the liquid options. If you're going to do credit spreads, trade stocks that have liquid options. Now, if you're going to trade something like we bought DoorDash, you might ask the question, okay, DoorDash isn't one of those 10. That's true. The reason why I looked at DoorDash is because it's in favor, a lot of people talking about it. And I looked at the options open interest, and I want to see a stock that has open interest in the thousands. Okay. I want to see that there's a lot of volume trading. And as long as I have those criteria, I mean, it's pretty straightforward. I can look for dips to sell a premium or sell a credit spread and look for prices to continue higher. Okay. So let's go back to Meta. Meta, nice little pop. All right. So I wouldn't want to sell a credit spread up here at the high of the day. I'd want to wait for the markets to settle down. Hold on one second. All right. So Meta continues to push higher. If you're trying to build a small account, now this is just my opinion. Okay. You can take it for what it's worth. But I've been doing this since 1987, not doing credit spreads. I only started doing credit spreads about, I don't know, 15 years ago, something like that. I think that's the easiest way. I won't say the easiest way, but I think it's the most consistent way that you can build a small account. Let's say you have a $2,000 account and you're interested in building it. I think it's much more difficult to buy just straight options. Now, if you've been doing it a while and you perfected your technique, people like Steven in the trading room, many of you in the trading room are good at directional trades, but the average new investor, I think you would find it a little more consistent if you were to sell options. You just need a level 3 approval from your broker. And what that means is, you're able to sell spreads and butterflies and the like. I don't know if you can do. I don't know if you can do calendars or you can do iron condors. So iron condor is basically a credit spread, both a call credit spread and a put credit spread, above and below price. I did that for a while there in in November, the month of November, we did an iron condor on IWM. IWM has since taken off to the upside. So selling a credit spread on IWM yesterday on these dips made sense. IWM continues to move higher. So that's looking really good. So you wouldn't do an iron condor on this because you get taken out on the upside, on the call side. But back in November, this was a pretty good setup. All right. So IWM. All right. So IWM, you can see back in November, this was a pretty good setup because we pulled back and we turned back up and we were just in the middle of this range. So that iron condor worked. So that's a credit spread on the downside and a credit spread on the upside. So this is a call credit spread and a put credit spread. Because we had this iron condor and expired January 19th, as this started moving towards 200, I took the call side off and just kept the put side on and made money on the credit spread or on the iron condor. Um, and took the top side off. So took the call side off as we started to trend higher. So still had a credit on the call side at the time that we took it off. It didn't get to the 200 level. It paused 2 weeks ago, right around 195. It hit 197, came back. So long story short, all I have now is a put credit spread. And what else do I have? Looks like a call vertical on IWM. I have a call vertical on IWM. Okay. And that's working fine. The call vertical is so I bought what is that? The March 202 call for $9.43, and I sold the March 207 for $6.75. So the trade cost me $3, basically $3 per contract. And it's moving higher. Now the debit spread or the credit spread is also doing well on this one. And for that, I sold the 197 put. So I was thinking that I don't think we're going to come back below the support level. So I sold the 197 and bought the 192, $5 wide. And that's making money. Okay. So markets are moving higher. If you took the trade off the open, SPY, nice follow through. I generally don't like to trade the first 30 minutes because we get chopped up a lot of times following through. Okay, cool. Tesla. Tesla's still going. All right, it's above 260. All right, Tesla's above 260, and what's it doing? It took off $2 and moving higher. Yeah, that was nice. Mhm. Okay, Tesla looking good. Nice follow through. Okay, the market's just paused here.
So keeping an eye on the markets, following the markets open here. The dollar's extending its drop. That's the Dixie down 0.5%. The S&P found its way flat on the session now as well.
All right, so a nice little follow through. S&P continues higher.
Remaining.
All right, so market's looking good. We know that semiconductors are strong. The sector, semiconductors, biotechs continue, consumer discretionary, pharmaceuticals, builders. 90% of sectors are green, only 10% are red. We've got financials are flat, utilities and crude oil are lower. VIX is lower. VIX is off 1.85%. Okay, so here we are with the New York FANG index again. New York FANG is on the move. Okay, if we take out that high, that would be significant. Watching the volume too on the FANG stocks. RSI is back above 70. We'd like to see this push higher, make it even higher high. I don't know that that's going to happen, but more than likely we're going to get some divergence here and reason to start taking some profits off. Look at Tesla. Tesla doing well today. Okay. In a minute, we'll look at the stocks that we talked about yesterday. Tesla breaking above that 260 level. CNBC's flabbergasted. We just continue to move higher. Tesla. Tesla looks good. All right, Tesla looking good. Tesla. All right, looks good. Okay, looking good. All right, Tesla looking good for the follow through. All right, so that's looking good. Nice job on Tesla. All right, so here we are at 10 o'clock. I'm just scanning through stocks that are showing strength, looking for high relative volume and VWAP up and to the right. Okay. Okay.
Well, certainly the last 6 months of inflation have looked very good. And as you're saying, we did not require recessions to see that disinflation happen. And we have not thought that there would be a recession. We don't think a recession is coming next year either. And the main reason for that is really the resilience of the service sector. The service sector employment is still, many sectors are still below pre-COVID levels. And that gives a major tailwind to the economy. And so what's happened is that pandemic-related surge in prices has unwound, and that really didn't require a sharp rise on the So, Chuck, then, if you believe what Dean is saying, I mean, the data sort of bears it out, what's it mean for markets in 2024? Well, I think it means very straightforward, and I do agree with Dean. I'm not looking for a recession. I don't think one.
All right. SPY pulling back in now a little bit. Okay. Tesla obviously looking good. It cleared 260. That is the level where most of the options over 6 months average, taking 6 months average open interest. So that includes this month and 6 months of data. 260 was a major level. So now that we've cleared that level, it stands to reason that some of this 255 and 260 open interest is going to roll up further out and higher in time. Probably the 270 is a likely area, that pivot right there for the next level. So Tesla looks like looking pretty good here. All right, Tesla looking good. Tesla looking good. Let me talk about something. Here's my again. I want to use my son's account because this is a good reference for those of you building a small account and building it up. All right, let's take a look at Tesla for a second. I want to show you something that will make a lot of sense to you. All right, so here's Tesla. He originally sold this. We originally sold his position for a credit of $62. Okay, let's take a look at simulating returns. Now, what this considers right here where price is, we bought this or sold this last week, I believe. So right now, we have price action moving up this slope. Now, what this is telling you is theta is kicking in. So this is exact opposite of what you would do, what you would see if you had a call position that wasn't moving, okay, or a put position that wasn't moving. The theta would be working against you. And as this time goes by, you can see that the up in the top left corner, I'm collecting the premium for that theta. Okay, something important to consider when you're trading options. I find that it's more consistent to sell options than to buy them. Now, if you're good with timing and you get a good buy signal, a day trade on an option makes sense, or a short-term swing, especially in something like Tesla that's trending. This looks really good. Okay, let's go here. Tesla. Tesla following through. All right, you can see that we're pulling out a little bit. All right, Tesla's at the high of the day. Tesla looks good. Tesla. Thank you, Tesla. Okay. Just watching the markets. A little rejection there at 476. VIX is still at the low of the day. Looking for higher highs and higher lows. Tesla's starting to squeeze now on the short time frames, 2 minute. Tesla squeezing. FANG stocks. We know that semiconductors and biotechs are doing well. Let's take a look at the biotechs real quick. LABU, XBI, and IBB. Okay, these continue to trend. XBI looking really sharp here. XBI. Okay, trending. Look at the 9/21/50 day. Now, if you were trading biotechs 3 months ago, you remember that we were below the 9/21/50 day. And what happened in November? We started to make higher lows. The moving averages went sideways. SPY is pulling back right here, by the way. SPY is pulling back. And we made a higher low in November. And then the 9 and 21 day started turning up and to the right. What is the significance of that? Once the 9 and 21 day roll up, the probability is that phase 2 is starting. The markup phase is much higher. And then you get the 50-day to turn in December. And now you got a full-on bullish run. Okay, so you recall that I sold a credit spread on XBI on November 30th with my son, right there on that inverted hammer looking candle. We broke out above 74.50. That was a signal to get long on XBI. So we took that trade. Let's see. As a credit spread. Is this it here? No, that's not it. So took that credit spread. This is it here. Okay, so this is the credit spread that we took on XBI. You can see where we broke out right there at 74.50. Okay. The trend was up. So what did I sell? You can see what we sold there, the 72.68 credit spread for $65. While it might not seem like a lot, as the markets move along and you keep doing this, it's pretty consistent income. You can grow a small account very quickly. Okay. So he's grown his account from $1,000 to $1,500 very quickly here. All right, so this is his small account challenge. It went from $1,000 to $1,546 since November, the last week of November. Okay, so that's not bad. Not bad for a little over a month. Right at a month. So not bad. Not bad. All right, Tesla continues to move higher. So we're looking at XBI. XBI is trending. So I would not buy XBI up here. I'd be looking for the next dip like we had last week. Okay, we had a dip last week on Friday. No, that was Thursday, right? Thursday, Friday. No, wait, 2 days this week. That was Wednesday. All right, Wednesday we pulled back, and then Thursday we bounced into Friday and broke out again. So the pullback is where I would be selling credit spreads, not the highs of the day. Okay, so that looks good. Tesla, XBI. All right, back to Tesla. Tesla's flagging at the high of the day. So if you're thinking about growing a small account more quicker, more consistently, and with less risk, everything has risk, obviously, but with less risk. I mean, if you have an 85% probability or an 80% probability of the trade working in your favor, I think the odds are much better than if you bought out of the money call options, which is what a lot of new traders to options do. They hear people talking about options and they say, "Oh man, what if I buy these options that are $10 out of the money?" Not knowing they just bought a 10 delta call, which means they have a 90% probability of losing the trade instead of the other way around. They have a 10% probability of maybe making some money. Okay, so you got to flip those odds in your favor. Get delta on your side and sell options instead of buy them. I find that just a more consistent way to make money. You can add call options or put options directionally, to supplement. All right, so let's take a look at some stocks that we were talking about yesterday. The follow through, AMD was one of them. AMD, all right, semiconductors doing well. AMD, all right, currently at 52-week highs. I believe the target has been met. I forget who it was, Raymond James or somebody upgraded AMD to a target of either 140 or 145. I forget which. That was a couple of weeks ago. AMD. All right, so AMD. Yeah, there's no news. So this can be a slow week for news going into the holiday weekend, New Year's. Again, I'm going to be out on Friday. I don't take very many days off. I need to start thinking about vacation from time to time because I've been working straight since 2017 with very little time off. I only take the long weekends. So one of these days in the future, I'm going to plan like a week off and have you guys trading in the room. I'll check in and everything during the holiday. That's not even planned yet. So I'll be off on Friday, this week, Friday. I'm going to drive down to Jacksonville for 2 days, spend the time with my family, my mother and my sister, so she can see her grandchildren and the aunt can see her niece and nephew. So that'll be Friday. I won't be here Friday. Friday's probably going to be extremely slow like it was the day before Christmas weekend, last Friday. It's pretty slow volume wise. Okay, Tesla, AMD. All right, so if you want to grow a small account, I would suggest doing some work, do your own work. Check out Invest with Henry. He's got a lot of good videos on butterflies, and I would suggest credit spreads to start. It's a level 3 approval at your broker. You just tell them that you trade options and you want to trade spreads, and they'll give you that approval. It takes a couple of days, and then you're done. You're ready. Get used to selling puts instead of buying puts when the market's trending higher and make consistent money. Okay, SPY is drifting to the low of the day now. It's off 32 cents, SPY. Not much going on right now. Okay, the FANG stocks after a pop this morning are all sort of fading. We still have 5 of 5 are green, 5 of 5 are red on the New York Stock Exchange, the New York FANG index. Apple's lower. Apple just now here's an example of when you sell options, it's in your favor. Apple's going nowhere. Okay, it's been fading. All right, so selling a call credit spread up here at 200, buying the 205 for protection. As this fades, you're making money. Okay, the opposite of a put credit spread. So right now we're watching Apple just continues this fade. Okay, let's see. Meta. Meta's at the high. All right, let's look at stocks that we talked about yesterday. See how they're doing. Okay, yesterday we talked about Enphase. All right, Enphase is a solar stock. Continues grinding higher. So this credit spread on Enphase is doing well. If you took it, we talked about it a couple of weeks ago when Aaron mentioned it, bounced off of the 50-day area. We had a bullish engulfing candle, 921 had crossed through the 50-day, volume picked up. So this was a really good setup to sell a credit spread. You got that nice reversal. You got people who thought that the stock was going to continue to move lower, so you sold them puts. You're making money as it continues to move away from where you sold, near the 100 or the 95 strike, I believe. 95.90 was the credit spread. All right, First Solar got an upgrade, and many of these solar stocks went with. All right, some of you took CSIQ, Canadian Solar. That's trending higher, a good candidate for credit spread as well. Although you want to check open interest. Okay, when I say a good candidate, I mean that the prices are trending higher, not necessarily CSIQ. You want to trade stocks that have high volume and high open interest and have a pretty narrow bid ask on the options that you're selling. All right, so we get a nice bounce here. Brother Bill took a iron condor on the SPY, I believe he said. This is working out pretty well. Okay, we're starting to get shorts covering now. All right, so that was one of the positions that we talked about yesterday, Enphase. Okay, McDonald's, I added that to the watch list yesterday. McDonald's grinding higher. So if you bought shares or you bought shares and sold a covered call, or maybe you took a credit spread underneath 287. This McDonald's is another one. Okay. So it doesn't move a lot, but if you can get an implied volatility of say 30% or 35%, and the spread is narrow, and you can sell like a 17 delta put and buy a 7 delta call, 7 delta put below for a credit spread, you can make about $1.50 per contract. That works really well. This looks like it's just going to keep trending higher. So that's McDonald's. We talked about that one yesterday, adding that to the watch list. Semiconductors, yesterday we mentioned we're strong. Okay, we got a gap up and we just got a little bit of profit taking. So think about it this way. We're approaching the holiday weekend. Many people like us, myself included, have been taking profits off in the strength, carrying smaller positions now. If I had 1,000 shares of anything 2 weeks ago, I probably have like 500 or 400 shares left. Just an example. Because as we continue to move higher, I'm taking profits off the table. That's what I'm seeing right here in the semiconductor ETF, SMH. We've had a nice run up for 3 days after a bounce off the 9 EMA. 921.50 are bullish, so I'm still thinking bullish. I'm just buying dips and selling rips. Just looks like some traders are taking profits off up here. Now, generally, by this time, an hour into the trading day, we'll see that selling dissipate. If it's going to be a bullish day, you'll see buyers come in and we'll push this a bit higher. RSI is saying that we could sustain this trend. Trend is very strong with RSI above 70. Stochastics embedded, MACD still above its signal line. The volume's been very good over the last 3 weeks. You can see volume, institutions been buying. Just a little profit taking. That's all it is right now. All right, so that was mentioned as well yesterday, right at the opening bell. Semiconductors, McDonald's, and Enphase. We talked about IWM. I took a credit spread on IWM, and I have a call vertical on this, looking for this to follow through. Many people are talking about IWM on social media. When I say many people, I'm talking about people that I follow, like Jason over at Three Peaks and Joe K over at Option Hawk. All right. So when I look at those people, or Sunrise Trader or Cameron, they're people that I follow that have trade professionally. They're all talking about IWM going into next year. Okay. Small caps outperforming. They broke above resistance. That's a key level. This is resistance that's held for 18 months, nearly 2 years, 197. All right. So once we cleared 197, that was a key level. So what did I do? I sold a credit spread, the 197, 192, I believe it was. Let me see. 197, 197, 197. I sold. I bought the 192, five wide. I do that quite often to get a decent credit. And I took a vertical as well. The vertical is also for January. No, I'm sorry, it's for March. I took I bought the 202 and sold the 207. Okay, so as it approaches 207, that's my maximum profit. Okay, 207 would be my maximum profit, where I match up with the call that I sold for a credit. Okay, so IWM continues this trend higher. The volume looks good. That's institutions over the last 4 to 6 weeks. MACD shows momentum is clearly bullish, and stochastics embedded. RSI is showing muscle. That's telling you that the strength of the trend is persistent when RSI is above 70 like that. A lot of people look at RSI as a reason to sell. It gets above 70, you're selling. That's not a reason to sell, at least not the way I look at RSI. RSI, when it's trending higher, is telling you the strength of the trend is improving. When it gets above 70 and stays there, it can stay there for a long time. And you can see that with IWM now. Would I buy here right now? No, I'd wait for a dip or a consolidation like we had a week ago. Volume looks good. Volume's tapering off as we're moving higher. So you want to keep an eye on your IWM. SPY is bouncing. Okay, Tesla off the screen. There we go. Tesla's starting to go again. Tesla. Okay, now that Tesla got above the 260 level, you can see that this is going to start to rip. Now, what am I talking about? 260. If you're paying attention in the trading room, most of you are, you can see over there that Tesla 260 is the call wall, the higher call wall, right? So once you get above 260, what does that mean? All right, so 260 is 6 months worth of option volume, open interest. So open interest is just viewed as, all right, these are people that are still swinging, looking for the price to go higher. Okay, so once we get above 260, that means, what does that mean? Well, that becomes support. Now we have to see these people that are in 260. Some of them will take profits. Some of them will roll up and to the right. Okay, they'll roll up and they'll roll out in time. So maybe 270 is the next level over here. You see that 27, 268.94 strike? I'm thinking 270 is going to be the next level for the open interest, maybe 265. So we'll start to look at open interest, 265 and 270 for the next levels. Tesla continues to look very strong. Okay. So that's why you should be monitoring the Money Magic channel, see his updates. Now he's on vacation, so I believe it's going to be a couple of weeks before we see the next update. But you get a general idea that prices are above the 260 call wall for Tesla. It's at 262.80 right now, stock. Tesla looks really good. All right, so we just watch Tesla for a few minutes. All right, so additional stocks that we talked about yesterday. Mondo mentioned HUT. Let's go take a look at that. HUT is Bitcoin related. All right, HUT gapping up. HUT gapping up. Okay, consolidating on a flat VWAP. So look for price to just stay here. Okay, HUT gapped up. Okay, so watch for price to stay right here. Okay, look at the volume. That's institutions buying or shorts covering or a combination of the two. Learn to read volume. Okay, so you can see over here in October, November, there wasn't much going on. And what was price action doing? moving sideways. So when price action is moving sideways, the moving averages are moving sideways. After moving lower, you know that phase one accumulation is occurring. You can see volume by price over here on the left. Moving averages move sideways, and then at some point, the volume picks up and the moving averages turn up and to the right. That's your clear signal that it's time for the next phase, phase two, which is the markup phase, where institutions have already got positions and now they're just letting the stock get marked up, and we start trending in a bullish direction. So 9 and 21 day of pointing up and to the right. Does that mean buy up here? Absolutely not. It means look for a dip to buy or a flag, but this looks pretty good, gapping up and to the right. All right, so HUT was one that we mentioned yesterday, Mondo talking about. All right, NIO was one that Brother Bill and others in the trading room are in. So we felt like if we could see another bullish day, if you missed the entry yesterday, this is a possible entry here too. Now, if you're thinking about NIO as an entry, watch the volume, watch the price action over the next couple hours. This might turn into an opportunity, moving more than 50% into yesterday's candle for an entry. So you didn't chase, you're waiting for the dip. Now you just need to see signs that buyers are stepping up. Let's take a look at the intraday chart. All right, so you don't see buyers yet. Okay, RSI is oversold. Watch the buyers here. This might be a nice opportunity. You're buying on a dip, so you're getting a better probability entry if you missed that run up yesterday. Okay, let's see if this fades or not. So keep an eye on this. I mean, it's early. It's only 10:33 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 27th of December. I won't be here on Friday. I'm going to take a much needed day off. We had Monday off, so this is kind of like a vacation for me, working 3 days, off for 6 or 7. I'll be off on Friday. I'll be back on Tuesday, the following week after New Year's. Okay, so here's NIO looking pretty good. Okay. Tesla just consolidating, SPY consolidating. Okay, we felt like this week would be slow in terms of volume. Most of the blocks that I'm looking at are SPY related. SPY is active. IWM has 1, 2, 3, 4 blocks. The significance of block trades tells you whether or not institutions are interested, neutral, or none of the above. Okay, right now it looks like they're basically neutral. There's not a whole lot going on. IWM's got 4 blocks, SPY has about 8, and the Qs have 3. I use a cutoff of around 75,000 shares to 100,000 shares in each block. The largest block is 500,000 shares on IWM at 204.80. All right, so let's look at IWM. Above 204.80 is bullish, below 204.80 is bearish intraday. We got a doji. Okay, can this be a 3 candle reversal where we have the first bullish day, the doji is the second day, and tomorrow being a red day, and we pull back to the 90 MA? I'm not thinking that the market's going to pull back dramatically, just either a grind higher. You can see RSI is still very strong. So we're just waiting for buyers to show up. Maybe momentum buyers will step up. We'll have to see. Tesla, keeping an eye on Tesla right now. Apple still fading. Mm. All right, so we're just fading a bit more, fading a bit more. Okay. Tesla just sitting here. Okay. So right now it just looks like given block trades, given one-to-one up-down volume on the NYSE, looks like we're just neutral at the moment. We're 3-1 on the Nasdaq, so that's pretty important. 3-1. Nasdaq is in favor. It looks like the FANG stocks, while they're not moving much. Nasdaq 3-1 up vol. All right, so Apache looking good. All right, yeah, I've been in this probably as long as you've been, Corey, sitting on a losing position on Apache. It's starting to move in the right direction. That's good. Moderna following through. Okay, Moderna followed through. We talked about Moderna a couple of weeks ago. Aaron mentioned it in a DM. We talked about that. Actually, it was Duck Trader. It was John Smith mentioned Moderna, mRNA. You still in this one, John? I don't know if you're listening. All right, nice move there, Moderna. Duck Hunter. Okay. All right, it looks really good. Moderna continuing. Moderna's just breaking trend. All right, so just breaking a downtrend. Yeah, exactly, Fran. I'm thinking the same thing. It's at 100 right now. A nice even number. All right, it broke its downtrend, and we're paying attention. I had a credit spread on this one. I took it off. I forget why. Need to take better notes. I've been really lapsed with the notes in the last couple of weeks. I've just been so preoccupied with everything going on with Christmas and everything that's going on with my mom visiting with my sister and just a lot of family stuff going on. So I haven't been taking good copious notes. It's easier to get lazy when the markets are trending. I find that generally I'll take better notes. Here's the weekly. Here's Moderna. Okay, so it should be pretty clear what's going on with Moderna, right? Okay, I think I might actually have a chart already. Let me look at Moderna, mRNA. I think I have a weekly here. Moderna weekly. Yeah, here we go. Moderna weekly. Yeah, you see Moderna? All right. So this is what we were thinking the beginning of the year. We were looking for this to break higher. Never happened, never happened, never happened, all the way through the whole entire year. Then all of a sudden we break through. We're just now breaking trend. We're only about 3 weeks into this. Okay. So if you're thinking about Moderna for a swing trade, all right, the next level resistance probably right around 120. You see that right there? Let me just enable volume by price. Volume by price. Okay, you can see very clearly volume by price. Let me just reduce the opacity or increase the opacity, I should say. All right, so looking at this, let's put a horizontal here, resistance levels. Okay, so we're right at the first resistance level with Moderna, just based on the weekly price action over the last year and a half in this area. We need to be paying attention. Now, it's not a guarantee because there's no way of knowing if these people are still here, but there's some memory. There's some memory in this area right in here. We're starting to run into potential resistance. People that didn't sell. There's a few members in the trading room that stuck with LABU this entire move lower in 2022 into 2023. So they've been sitting on these LABU positions for 2 years. I mean, that's a long time. Okay, let's look at LABU. LABU. Okay, so Moderna, before we leave, just know that we're right at some resistance at 100. If we get into this area here, we start to build more resistance, more supply, potentially. Just have to watch price action. What does all that mean, Benny? What it means is we're breaking a downtrend. If a portfolio manager sees this or has seen it over the last few weeks, they're more than likely picking up shares. You can see the volume starting to pick up. So that's institutions. Look at the average volume here. It's about 10 million shares. Yesterday we bought about 25 million shares traded hands, or last week, I should say. This week we're seeing a follow through. So this is going to start making higher highs and higher lows, most likely. Let's look at the daily. So it's going to make higher highs and higher lows, which means you don't want to buy right here unless you're scalping. You want to buy intraday, then use the ABCD patterns, VWAP, and volume for your reference points. I would probably see this if it does drift lower at some point. That would be a better entry. If you were thinking about taking an entry no matter what, I would suggest scaling in. If you're going to take 1,000 shares, maybe only take 100 shares. You want to participate. If it does pull back, then you can, add a couple hundred shares on a dip once it bounces. Or if it continues higher, now you're participating in it. Maybe you add a little bit. But the fact that it's at the third Keltner band tells me that there's a potential for this to pull back at some point, still be bullish. All right, so here's the Bollinger Bands. Look at that lower Bollinger Band. That's telling you look for a fast move. So far, the Bollinger Band hasn't turned up or inward. So that's telling me this probably keeps going. Well, it's not a guarantee. Moderna looks really good. We talked about Moderna yesterday. Remember that run up yesterday? How the SPY just took off around 230 into 330, just ran like crazy to the highs. The bears have to be careful that that happens again today. No. Stock charts. Let's see. Actually, yes. Actually, yes, it is. Okay, so some of you said that you're having problems with stock charts updating. I see the 27th over here. Okay, 27th. So yes, mine is updating. That happens from time to time. They probably fixed it now. Moderna. All right. So if Moderna is moving, we want to check that whole group. Okay. So the my method is that if I see one stock moving, that's not enough. I want to check the other stocks too. So I'm never in a hurry to take a position, especially if it's going to be a swing. I'm looking at this 25 stocks that make up the Nasdaq ETF, IBB. Okay. So I want to sort this by performance and look at what stocks are moving. So we've traded BioNTech, we've traded Novocure before. Novocure. Okay, look at this one. It's a fairly inexpensive name. So let's say you buy 100 shares of this and you set it and forget it. Or maybe you take a leap option. Maybe you buy, if they have options, maybe you buy a leap option for next year. Okay, it's going to cost you a little bit, but it'd be less than buying, say, 100 shares, I would imagine. Let's see, NVCR. NVCR. So these have bottomed. NVCR. Let's see. It does offer options, and you can buy 2025. You can buy January 2025s on the call side. Let's see what that looks like. January. So you could buy a leap option, and that would cost you $500 versus $1,400. So if you bought in the money, at 1250, it's a synthetic long. Basically, you're substituting shares for every option. You're effectively have 100 shares, right? So instead of paying up $1,400, you could buy an in the money leap that expires next year for about $500. Now, the good thing about leaps is that theta doesn't really enter the picture. Theta is 0.006. So 6/1000ths in the theta. So you got like very minimal theta exposure. And I'm just using this as an example. So if you're thinking that a lot of these stocks in the biotech are going to turn, you don't have to trade individual ones, of course. You could trade XBI, IBB, or LABU. I would suggest the former two, not the latter, since the latter tends to be a asset that loses value over time. Let's see, LABU, LABU. All right, these are all turning. Okay, LABU on the weekly. You can see it's turning. Probably starts to run into some resistance soon. Hey, man. All right, there's a sausage and pancake as well if you want. All right. Why don't you go ride your bike when it stops raining? Okay. So that's the biotechs. Biotechs are pretty strong. It's been several days in a row. Last week it was strong as well. Tesla, because that's LABU, IBB, and XBI. You can see much stronger price action. Okay. Look at the volume. That tells you a lot about what to anticipate. That's institutions buying. Okay. Okay. S&P pulling back a bit more. It's off 47 cents. SPY is off 47 cents. Okay, sectors have gone about 55% red now, 45% green. Oh boy. CORZQ took off. Okay, what is it? CORZQ. Okay. Holy smokes. Okay, yeah, that one nice. Okay, S&P. All right, so let's go to the S&P 500. SPX, S&P 500. Okay, 47.75. Watching that level. 47.75. That's a support resistance level. Oops, what was that? Okay, looking for a bounce. Yeah, I hear you. I hear you, Mondo. Yeah, I like calculated risk. Yeah, I would too. I'd dial down my risk. I can't imagine doing what you're doing. It's hard enough for me, just managing a broadcast. I can't imagine managing a crew of people and, multi $100,000 projects. Mhm. All right, so right now I'm not doing a whole lot. The markets are just kind of chopping around. I want to see continuation on many of these positions. CSP is just sitting here. The Nasdaq looks good. Nasdaq a little bit better. Um, Looking at higher lows. Okay, higher low, higher low, higher low. Looking for a higher high now. IWM has been looking the best. Trend yesterday was awesome. I also mentioned yesterday that to expect that we'd see the same kind of price action we had yesterday again today, kind of fallible in the sense that yesterday was a rarity. Most stocks were higher during the day. We had decent up volume. Tick cumulative is green. Pretty much everything is pointing to higher highs and higher lows. Let's take a look at some of our indicators, however. Let's go look at the number of stocks trading above the 50-day and 200-day. These have been in the red zone for a couple of weeks now. Okay. So since the beginning of December, we've moved into the red zone. This is subjective. I put this on the chart so that it's obvious what I'm talking about. Okay. So when we get up into this level, 90% of stocks are above the 50-day. What does that mean? There's only 10% left. Now, can that continue? Sure. If the persistence um, is pervasive and we just continue seeing buying, but the likelihood is, people are going to get exhausted and there's going to be fewer and fewer people to buy. So this trend moving higher, at some point we got to pull back, get rid of some of the people that were buying and chasing, flush them out, come back a little bit, and then bounce. Okay. Better odds when we're down in the green zone, as you can see in the lower panel, that's the 200-day. So back at the end of October, I don't like to use the phrase pounding the table, but I think I got the point across that this is where you want to be buying. You want to be buying when the markets are oversold. The number of stocks above the 50-day is down to like 10%, which means 90% were below the 50-day. That means that to me, you flip the hat on backwards, institutions will be interested in buying down here, and then everybody will tag along. And as a result, we get this kind of rally that you can trade the next time. The next time is the peak. Okay, that'll mean that we'll probably pull back in. I'm expecting maybe 3 to 5%, maybe in the first couple of weeks of January, and by the end of January, we rally to a new high, something along those lines. I have no idea. I don't have a crystal ball to tell you what's going to happen, but we are in a zone where who's left to buy, basically. That's the way of looking at it. Who's left to buy? Institutions bought down here in October into November. I would think they're going to be taking profits off, higher probability, into this last week of trading. So we've been taking profits off into strength for the last couple of weeks, mentioning, carrying smaller positions. Growth and value. Okay, so these are both, look at the 20 EMA, 21 EMA, continues trending. Price is way extended away. Look over here. Look over here in June and July, August, when the 20 EMA was trending like that. Occasionally, we would have these pullbacks. That's what I'm anticipating sooner rather than later. Okay. Okay. So we're oversold now. Stochastic's oversold. So maybe we continue to move higher. We've consolidated over the last week. So maybe this continues for another few days, but we're getting closer and closer, I think, to a pullback, 3 to 5%. That's what I would plan for. Doesn't mean a whole lot for people that are trading, say, TRBCX or, you know, long only funds in their 401ks, that you have working a day job. TRBCX. and you're just investing. You're not worried about these little pullbacks. All right, so TRBCX, the strategy here as well, back in November, December is when we got long, rallied into July, went sideways to slightly lower. That's the consolidation. So what happens next? The trend phase. Okay, we're trending again, probably headed up to that 170 level where the market's peaked in 2022. All right, the New York Stock Exchange. Okay, so all I can tell you is that this continues to build higher highs, higher lows. We're above the zero line. This is just a simple calculation, taking the New York Stock Exchange, the new highs, I'm subtracting new lows. That gives you a net result. 152 stocks making a net new high, 70% improvement over yesterday, which was pretty decent. Advanced decline looks like it's starting to peak right here, advanced decline. But that's bullish. It's above the highs of the year. And we've got blue and green elder sticks on the New York Stock Exchange, composite, 2,000 stocks, NYA. So that looks good. We're at the highs. I'd only be concerned about this if you're day trading or short-term swing trading. If you're, an investor mindset, you're probably reducing your exposure into the highs, into year end, and maybe, collecting a little bit more cash. That way, if we do have a 3 to 5% pullback, you can take another look, or you could just leave it alone. Get into a low beta index fund. All right, so that's New York Stock Exchange high low. Let's see, what else do we want to look at? Bullish percent. Okay, continues climbing into the red zone. This can get to the 80% level before before peaking. It's just a number of stocks on a point and figure buy signal. If you look at the S&P 500, point and figure, just a column of X's and O's. This is the way I learned how to chart early in my investing career. Very easy to understand. Whenever a box or a level fills during the day, you just put an X if it's bullish, moving higher. Put an O if it reverses a certain amount. It's usually a 3-box reversal to start adding O's. O's are selling, X's are buying. You can see the trend is automatically calculated. This is automatically plotted at a 45-degree angle from corner to corner in these squares. Okay. So the thing about point and figure, though, the one detriment is that it needs to fall quite a bit before you get the reversal signal. So this is good for longer term stuff, longer term. But point and figure buy signals is what this is based on. The bullish percent, New York Stock Exchange bullish percent. It's based on the number of point and figure buy signals. Okay, you can see that when we got 4650, that produced an X above this one here. That was in July, the month, 7th month, July. Then August, we went sideways down in September. October, November is A and B. December is C. You can see we're breaking out during the month of December. We got a pivot over here at 4,800 that we put in 2021. And that's what everybody's pointing to right now. So we're more than likely going to fill this box before the year end, I would think. So that's point and figure in a nutshell. Okay, IWM pulling back a little bit. Okay, you can see that chasing didn't work very well. All right, so you're looking at GE there, Bill? Okay, GE. Yeah, that's been trending. Nice. Okay, looks good. Mara, continuation. All right, Mara. Looks good, Mara. All right. Let's see. That's so funny. Yeah, Carney's changed so much. Yeah, I agree with you. Oh boy. All right. So watching IWM, a little fade. Not expecting a whole lot. After a big run up yesterday, 30% pullback, 382 pullback. It looks like about 236 right now. So 236. Okay, so here is yesterday's price action. We're right at between 382 and 236 from that low pivot. Okay, so that's a reasonable little pullback in IWM. I'm just sitting here scanning through stocks. Not a whole lot to do. The markets are just sitting here chopping around. No trend. Flat VWAP. You can see what a flat VWAP gets us. No trend. No momentum. All right, flat market at the moment. Yeah, Mondo, I didn't live in Kearney. I lived in Hawthorne. Yeah, I was out west. Mm. All right, so I'm just sitting here watching the markets. Mara's going. Mara. Yeah, when the year that she graduated, 2024 into 2025, we went on a road trip from San Francisco down to San Diego. Then we flew back home. It was fun. We took a week off. That was a lot of fun. All right, looking good.
increase in traffic to Road.co since the launch.
All right, nice look to the markets. Mara is just going ballistic. All right, nice looking. Mara.
Yeah, so how it works, maybe I'll give a little bit of background about how the body program works. So patients will go to Row.co. They will go through a rigorous and comprehensive onboarding that will assess their metabolic health, insurance coverage, their preferences, clinical eligibility, and through that, we will determine the best next steps and maximize their insurance coverage. Understanding, again, their metabolic health, we'll run lab tests, and then if appropriate, they'll move forward with treatment at the lowest possible cost. After that, that's really where the program starts. So patients can message their providers 24/7. They have one-to-one coaching with a nurse, an educational curriculum. They have monthly check-ins as well, and they can report side effects in real time and have those reviewed by a healthcare provider. So it's really a comprehensive and ongoing chronic care management program for patients.
So Zach, this is Frank Holland here with Sarah at Post 9. So I'm looking on your website. On your website, there's an asterisk next to it, but you say that people can lose 15 to 20% of their weight in a year using one of these GLP-1 drugs. Just to put that in perspective, you have a tool on the site. So if you lose 200 pounds, you go down to basically 160. What kind of, I guess, results have you seen so far?
IWM. Still looking good. Looking for the follow through.
We're seeing, it's a great question. The asterisk is there, and I think that's a good question. The asterisk is there simply because that is what was seen in the clinical trials, and it depends on the drug that a patient is on, and there's a range of drugs, right? So Wegovy patients see about 15% weight loss over the course of the year. For Zepbound or Mounjaro, same active ingredient, patients might see 20 to 22% weight loss after a year, and after 88 weeks, there's some studies that actually show patients are losing 25% of their body weight. The Row Body program has been around just around a year, and we've seen patient results match those of the clinical trials. So we're very, very encouraged by the results of the program so far.
But Zach, I do want to ask you, those are stats. That's a pretty extreme weight loss. You're 200 pounds to get down to 160, and also I saw earlier this year you launched what you call basically a body program that involves coaching and some other things. So basically, does someone have to buy a whole suite of your products to get these kind of results? And if they took the medicine, what do you think don't get the results that you're promising? I know it's clinical trials. I know it's not your study, but it is on your website.
Yeah, absolutely. So the patients that come on, we are seeing results that match those of the clinical trial. In order for someone to get access to treatment and medication, they go to Row.co and they see if they are eligible for the Body program, which is high-quality clinical care centered around GLP-1s. That includes one-to-one coaching, it includes 24/7 access with their provider, monthly check-ins to be able to titrate their dose, manage any side effects, see what's right for them. In addition to that, in the background, we're constantly optimizing their insurance coverage. If a new savings card comes available, if they change jobs, if their employer changes the insurance that they have, which we will see on 1/1, a lot of updates in insurance plans. So in the background, we're constantly working to make sure that the patient has the right treatment at the lowest possible cost for them on an ongoing basis.
And in all fairness, without insurance, according to the data that you gave us, it's $1,000 a month for these GLP-1 drugs.
So the majority of patients that go to Row.co and are eligible for treatment, the majority of them do pay less than $1,000. So they see some form of cost assistance either from their insurance program or from savings card usage. We do see, and if you break down coverage throughout the country, it does vary, right? So about 40 to 50 million people are covered from their commercial insurer, and of those 40 to 50 million, 80% are paying $25 or less. So when people are covered by their insurer, so I think that we'll see this be a very popular topic with employers in 2024 and beyond. But when people are covered, the vast majority, 80%, are paying $25 or less. And all employees of the federal government have coverage for anti-obesity medication. 10 out of 50 states related for Medicaid, and is actually Medicare is legally prevented from covering GLP-1s or weight loss medication. They cover GLP-1s for diabetes actually. And so there are bipartisan bills on the floor that can hopefully reverse that. So I think over the next 2 to 3 years, you will see more and more. You'll see coverage increase. You'll see competition drive prices down. Right? Eli Lilly came in with a more effective drug at a lower price.
So that is really, I think, the question that investors are trying to wrap their arms around, which is how widespread are these drugs going to be, and what sort of changes are they going to have in our society? Everything from packaged food, we're talking about alcohol sales, medical device sales, if our health outcomes are better. When you look at the potential and the size and the scope of how many people are going to be on this drug, say, in the next 5 years globally, and it does depend how much insurance is going to cover, what do you see?
So the really interesting thing with GLP-1s is they satisfy five criteria we've never seen before in medicine, right? So the obesity is the most common disease in the U.S. So the majority of the U.S. population is eligible for the drug. That has never happened before. It's highly effective. It's scalable. Patients want it. Providers and major stakeholders in the healthcare system want patients to have it. So those five things have never happened before. And so we think that right now you see probably about 5 million patients on GLP-1s. Again, the majority are being treated for diabetes.
Okay.
Goldman Sachs put out an analyst report about a week ago, seeing potentially just in the U.S. more than 10xing that number. So about 60 to 70 million people in the U.S. they see potentially 5-7 years from now on this drug, and we estimated it could be a $400 billion market in the U.S. I think that translates. Usually the U.S. is about, for these major blockbuster drugs, about 50% of the global market. So you're just 2x.
Okay, looking for a bounce. All right, Mara is just going crazy.
So we do see the minority of employers cover it. We are expecting, I think, 2 to 3x the number of employers to cover it. Very few. The recent studies, 99% plus will keep. So very few will decrease their coverage. You're going to see a 2 to 3x increase in coverage. I think you're going to see with more and more drugs in the pipeline, the generics coming online, with orals versus injectables also being added. You're going to see prices come down. It might take a little bit longer than people expect. But the most important thing that I think you'll see here is,
All right, looking good.
we've run studies on this with the Obesity Action Coalition, the OAC, that 40 to 50% of employees will either stay at a job they hate if it covers GLP-1s, or quit a job and take another one if it covers GLP-1s. So it is, I think people are underestimating the importance and the role that these treatments play in patients' lives.
Why don't you go public? I think your last raise is $7 billion valuation 2022. This market has been hungry for anything obesity drug related.
Yeah, we're 100% focused on our patients right now. We think we are at the beginning of the most important shift in medicine in the last 30 to 50 years. And we've helped millions of patients across the country, but there are tens or 100 million plus patients in the U.S. that need help here. And so we're 100% focused on making sure that if a patient comes to Ro.co, we can deliver them high quality outcomes like we see here.
What are you, hungry? You hungry? Trying to get my attention?
Plus, don't forget Money Movers is a podcast. You can follow and subscribe wherever you listen to your podcast. Stay with us.
All right, looking good. Okay, Mara continues to push higher. Mara, Marathon Digital. Mondo bringing this one to your attention about 3 or 4 weeks ago. Continues higher. Look at this market. Beautiful, beautiful. All right, Mara, Marathon Digital just keeps going. Wow, this is really something. Nice one there, Mondo. Marathon Digital.
I'm a fan of good basketball, Savannah. The Sixers doing great this year, but I'm a Pistons fan. I used to live there. Savannah Hadal, thank you very much. All right, coming up next here on Money Movers, Weekly's Peter Bookball and the trade-offs of falling inflation. Can a stronger consumer help to offset slowing revenue growth for companies? We're back in 2 minutes.
All right, look at Mara. What a nice job. Jeez, this thing's kicking buttocks, Mondo. Nice job. Okay, this is a double, right? This one went from 15. Mara went from 15. I think it was like 15 when this thing started to break out. There it is. Okay, Mara, Marathon, Marathon, Digital. Still working. All right, Marathon. Just as I start talking about it, of course, it's pulling back a little bit. Marathon Digital. Oh boy. All right, looking good. All right, so you can see Marathon Digital back here in the tens when this started to break out. So that's a triple. Marathon's a triple.
Yes, Sarah. It looks like Apple has
That's a three bagger. They're really nice.
ban on the Apple Watches until between January 5 and January 10th. This is from an appeals court that Apple filed yesterday to the appeals court asking for a stay on this while Customs and Border Control oversees this. And now this order here from federal court saying the International Trade Commission, which originally put the ban in place and ruled that Apple is violating their patents, they have until the 10th of January of next year to file its appeal to this. But in the meantime, right now, Apple has won a minor legal battle in this.
All right, Marathon still going.
We'll see what this means, if they're going to sell Apple Watches, for the next couple of weeks or what. But for right now, this is a little bit of a legal win for Apple, Sarah. I'll take it for your Steve. Yeah, looking at Apple stock right now, it's still down about 0.5%. We'll continue to watch it. Let us know if there's any other developments related to this. Our Steve Kodak with the latest on Apple and the Apple Watch. All right, our next guest expects the Fed to cut next year, but says that long-term rates they could actually rise as investors would see the Fed pulling back from the fight on inflation. He thinks we could see a weaker dollar and is now looking at treasuries with a longer duration than 3 years. Joining us now, Weekly Financial Group Chief Investment Officer Peter Boockvar. Peter, happy holidays. Good to see you.
Thanks, Frank. You too.
All right, so we already see the weaker dollar actually down 0.5%, down 5% in Q4. But explain the treasury part. I'm looking at the 2-year yield and the 20-year yield. They're pretty close. Why wouldn't you want to lock in that longer yield?
I still think there's duration risk. I mean, it was only a few months ago that we were all worried about excessive treasury supply to plug the hole of the rising budget deficit. And I don't think that goes away. I think we're in a situation where 2024 is still going to be defined by the Fed.
Nice move. All right, so Marathon Digital.
And the U.S. Treasury is selling at least $2 trillion worth of bonds. So even though we can see, and we will see likely, a cut in short-term interest rates, I would not discount the possibility of a resumption of the rise in long-term interest rates where we even retest that 5% 10-year yield again.
All right, you're also looking at commodity prices, specifically oil. You're worried that a weaker dollar might lead to a bit of a rally in oil, but we really just haven't seen that, even with the Biden administration buying barrels to build the strategic petroleum reserve. Where's this concern about oil coming from? Because so far, even with the OPEC cuts and a lot of other actions, we haven't seen that price rise or even raise yet.
There's definitely concerns on the demand side, which I understand. Europe's in a recession. China's obviously slowed. U.S. growth is obviously in question. But I still think that the supply side is going to be relatively disciplined. The interesting thing with the extra supply in 2023 was a surprise to the upside with U.S. production. But rig counts continue to fall, so I just don't see that the U.S. production levels can be sustained. And other commodities, copper's at a multi-month high, iron ore's at an 18-month high, that if the dollar index does break below 100, I think you can light a fire under commodities, and we remain bullish and long those.
Peter, the thing with the treasury call is that now there's demand mean, we saw it, we've been seeing it at auctions, saw it yesterday, we have more auctions today. But the whole story has changed since the Fed has pivoted and is now worried about the risk of preserving the soft landing and then wants to keep cutting rates.
No doubt that helped the rally. Also,
All right. So just sitting here scanning through stocks, watching what's going on. The markets are back up to the highs now. So really nice.
So you're right. We had this massive rally, not just along the curve, but around the world in global bonds after the sell. But the 10-year yield, even after this rally, like I said, is just back where we were in July. But I still think that these big picture concerns with respect to supply is not going away. And it gets to where with the Fed. The Fed is saying they're going to cut 3 times. The market's saying they're going to cut 6. They're going to cut 6 because the economy is weaker than expected, which means the budget deficit is going to be higher than expected, which means treasury supply is going to be higher than expected. So I see a lot of big fund trade-offs in 2024 and not the easy street that the market's pricing in right now.
But doesn't it also mean that there's that the economy weakens more than expected, or you just think that it's more powerful force, the supply demand issue?
Well, that's going to be the interesting trade-off. Do we buy long-term treasuries because growth and inflation is moderating, but on the other hand, that supply tsunami, how does that sort of interact with that? And it is a very interesting question to where that clearing price is going to be. I still think that for a 4-year bond bull market, this bond bear market doesn't end in just 2 to 3 years, and that we have what may come in the longer end. While shorter-term treasuries, I think, are much more safer to be owning.
Beautiful call with your financial group. You also say right now is a good time to invest in small caps. Didn't have time to get to it, but great to see you. Thank you very much.
Thanks, Stephen.
When we come back, iPhone design
All right. Looks like a nice follow through. Mara.
on a project at OpenAI.
Continuation. Flagging. Okay. The FANG stocks. Apple did turn. Tesla trying to get something going here. Meta's turning the corner. There goes Meta. Cool. All right. NVIDIA, AMD. What's NVIDIA doing? NVIDIA sideways. Flat VWAP for the most part right now. This is a 15-minute chart, so you can see multi-days there. 5-minute chart starting to move a bit higher. Tell you what, one thing I've been thinking about a lot lately is this market has been extremely, extremely, extremely forgiving and persistent. I mean, it's really messing with the bears' minds, I imagine. But you got to go with price. My opinion, for what it's worth, I keep thinking that we're going to reverse, but you know what? The markets keep going. So the train is still on the tracks and still hasn't stopped at the station. No one's getting off. Some people are getting off. They're having to jump off the train as it flies past. Now, my next thought is that we're going to get to 4,800, and that's where we're going to stop. Okay. So 4,800 is major resistance. Okay. We're just chopping around right now. So who knows what's going to happen? All I can tell you is that the markets are really forgiving. At some point, we're going to run into resistance. All right, take these pivots right here. I want to show you something. You probably picked up on this yesterday or the day before. Okay, these pivot points. Okay, let me just change the color so it's obvious what I'm thinking. All right, there's that. And there's this pivot over here. Okay, so these two pivots create this Fibonacci from here to here. Okay, that double top. Okay, so 0 up to 100%, and then your extensions 1618 at 449.14. more than likely we're going to get to 5,000. You know, there's a very large build right now in option gamma. Okay, building up here at 4,800. Let me go to the videotape. All right, here's this. Okay, so this big spike over here on the left, I don't know if you can see it. It's off to the left. That is 5,000. Okay, over there on the far right. The far right is 5,000. You can see it's building. Currently, we got 4,800. That's the next largest level that we need to get through. Most likely will be resistance. Okay, so that's 4,800 right there. We got a couple of levels above that, 4,850, 4,900. But note that there's not very much on the put side that's building there, mostly on the call side. Not until you get to 5,000, 4,800, and 5,000 do you see a lot of puts. So that's going to be resistance as we approach that level. Now, as we're approaching 4,800, not only do you have people taking profits in the calls, but you also have people that's saying, okay, this is not working, and they get rid of the puts. So that relieves the dealer from their delta exposure, and they can roll things up. For now, we don't see any puts until we get to 5,000, 4,800 and 5,000. And of course, you can see down here below where current price, that's where a lot of puts are in the money. So as we start to move higher, the puts that are in the money, they have to start taking profits unless they want to see it blow up and the markets keep doing what it's doing. So just something to think about. Okay, the S&P still trending higher. I got to take a couple minute break. I'm going to go stand outside and put my face in the rain. Get a little rain on the face. Give me 5 minutes. I'll be right back. I'm going to take a couple minute break. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 11:50, almost 12 o'clock on the East Coast, the best coast, the coast with the most, Costa Nostra. We love you guys on the West Coast and the Midwest, down there in the Texas Panhandle and whatever. Hopefully, everybody's having a good day. I'll be back in 5 minutes, so let me take a couple of minute break. Watch the FANG stocks; they're all bid right now. Give me 5. right, looking good.
All right, welcome back to Money Movers. Moffett Nathanson calling Amazon, Shopify, and Uber its top picks for the new year. They're releasing a new note with the 2024 outlook for internet and e-commerce names. Joining us now is the analyst behind that note, Moffett Nathanson's Michael Morton. Michael, happy holidays. Great to hear.
Hey, thanks for having me.
All right, so Michael, hard not to notice here that your picks are very closely tied to consumer spending. Maybe you need your top picks. Is that also just a proxy for your confidence that the consumer will continue to spend in the new year?
Yes, more specifically, it's a reflection of where we think the consumer is going to spend. I would say Shopify is an exception to the rules. There's always exceptions to rules like this. But the consumer in 2023 will likely look similarly in 2024, and that will be a preference towards experiences, which are measured as services, and non-discretionary goods. If you look at our covered companies that sell things you don't need, they've really struggled to grow. Post-COVID, as there was a huge pull forward. Amazon has a great exposure to non-discretionary. They get it to you faster than anyone, and we believe there's a lot of upside to profitability in the retail business as you see leverage through their logistics. And Uber, as we all know, if you're trying to go out to dinner with family and friends over the holiday, travel to the airport, it's a great way to play the consumer's interest in experiences over things they don't need.
So is that thesis, is that the reason why you actually lowered your price targets on DoorDash and Etsy?
Yes, DoorDash and Etsy both have slightly different issues. DoorDash is a stock that we love. We initiated on in January. The profitability thesis has really played out. We are concerned about food delivery and its exposure to the same consumer that owns student loans. If you look at the overlap of the app usage age to the overlap of where much of the student loans that restarted in October sit, it's pretty much a 1-for-1 ratio. And again, we think the delivery business is a great business that's been misunderstood for a long time, but the consumer is going to see this bill show up at the end of the month. The student loans kicked in October, and we think that food delivery could be one budgetary area that they might cut their spending.
Really quickly, since you mentioned Amazon as a buy, what do you think of today's news that they're going to start showing ads on Amazon Prime Video unless you want to pay an extra $3 a month to get an ad-free version? How big of a deal is this for investors and for the company's financials?
Yeah, there's a lot of things to interpret through this news. First, it shows a cultural shift that has occurred in Amazon over the last 12 months. Again, as part of our
The second thing is we love the strategy that they've taken. You see other companies that are starting to layer ads in, where you basically need to opt in and say, hey, I want to see ads. Amazon, in very clever fashion, in the way they like to operate, you need to opt out. So by default, you're going to start seeing these advertisements, and it will help subsidize the billions and billions of dollars that they spend on content every year. So it's just another check of the box, reflecting this business's forward-looking emphasis on profitability growth.
Yeah, pretty big shift for Amazon. I don't mind paying for Prime, but there's something about having to pay that extra $3 to not have ads. Michael Morton from MoffettNathanson, thank you for your picks. Appreciate you. Have a great day.
So deal with the ads.
I'm watching The Boys. I'm watching Reacher. I don't want to see ads.
I know, you're already paying 15 a month for the all in. By the way, Frank, it looks like we're higher again. We're swung back and forth between gains and losses for the S&P 500. It's important that we're watching these levels. 47.76, 47.96 will be the all-time closing high. Will we get there today? Who knows?
Who knows also is that let's see the NASDAQ rebound. I don't think Apple's quite rebounded after the Apple Watch news was down 0.5%, but still seeing the NASDAQ just kind of inch into positive territory.
A lot of numbers 52-week highs today. A lot in the travel sector as well. Some of the hotels, like a Marriott. That's going to do it for us today on Money Movers. Thank you, Frank Collin. Now back over to Scott and the halftime report.
Hi, Karen. Thanks for welcome to the halftime report. I'm Scott Walker, front and center this hour. Surging stocks, S&P nearing a new record high. Now our investment committee debates where the rally really goes from here. Joining me for the hour, Joe Terranova, Jenny Harrington, Steve White. We're all at post 9 as we check the markets today. So we said we're green across the board. NASDAQ 100 hits a new record high today. Russell 2000 is at a new 52-week high. Jenny, industrials and tech hitting a new high. Discretionary communications materials 52-week high. The Santa Claus rallies in full swing.
It sure is. So I have in my head is all well that ends well. And, particularly from a dividend perspective, right? Where if you look at some of the dividend indices, they started January up a lot, actually went into significantly negative territory. Now they're positive on the year. The S&P's just been up all year. And so is all well that ends well? Maybe, but what I'm getting nervous about is looking into next year. And does all the froth and this huge rally into here, does it set us up for a successful 2024? Because in the markets, like it never ends, and that's what has me a little uncomfortable right now. It feels great. It's going to be really nice to send clients their quarterly reports with great numbers. It's going to be nice to write a quarterly letter with great numbers. But what is next year hold? And it feels a little crazy to me to be at 26% this year and to be looking into next year and reading earnings reports and of course this year where it's like, oh, hey, they had a great quarter because they didn't disappoint.
Unless you believe that this good story, Steve, is just beginning. Goldman put out their 10 forecast for 2024. The out of consensus call is their growth forecast. GDP is going to beat expectations. Consumer spending beats expectations. Core PCE falls below the Fed's 2.4% target. The Fed will cut 5 times. Now,
All right, it's 12 o'clock.
specifically on Monty's team, Goldman. They've been consistently lowering their recession odds almost the whole way. What do you think of what they say? Because this builds the case that this is not just a end-of-year run phenomenon that soon just rolls over as the calendar does.
I don't think that those folks say there won't be profit taking. I know, for me, it certainly counts, and there will be some profit taking. I'm not sure it's going to be day one, but I am looking to lighten a couple of positions from a portfolio standpoint. They've gotten so big from this year. So
Believe this, what they say?
yeah, look, I've looked back over the last 60 years actually and seen how often we got multiple years in a row of 20 to 30%. And it's not as rare as you think. So the possibility is definitely there. In terms of markets,
All right, you guys that are looking at NIO, Tony, you looking at NIO? Okay, let's look at NIO. Looks good here. NIO looks like it wants to turn.
recession question is not answered completely yet. But here's what I think. So I think that we'll continue to be bullish in the market going into first quarter earnings. And, I thought about this a lot over the last year. Why isn't the market really trading down? Now, get away from Magnificent 7
Mayo looks good here for a turn. All right, sectors are beginning to build bullish. About 75% are green now. Biotechs are 75% green. It was 50-50. Now we're back to 75% green. S&P 500 above VWAP, looking for a bounce. Okay, just watching here.
multiples, by historic valuation ranges, by however you look at it. But I think
What is Snap doing? Snap. Snap.
and not for small cap benefits, value benefits, international benefits, everything that didn't participate in the huge moves up this year, I think benefits next year on a relative basis. And then we get into the argument about magnitude, right?
Okay, starting to move. Higher lows building.
Or is it going to be steady? I would love just to see steady. So this year, I thought this year was the worst, right? Like it would have been so much nicer if it was just up 1% each month, 1.5% each month, whatever it was. This year sent people for a total head game. And so I worry that that's kind of the market we're in, where we have it down 20% in 22 and up 26% in 23. And I hope that we don't see more of that, although you're probably right, we will, because there is a gamification of the market that's happened, right? We do know that 85% plus of trading volume each time is done by algorithmic robotic trading programs. That doesn't lead to, or that doesn't lend itself to rational, calm, like slow and steady wins the race.
Edgar Denny's talking about.
Right? Well, it hasn't so far.
Edgar Denny's talking about S&P hitting 5,400
Yeah.
next year, probably the highest target out there. It just sounds like it as
Here's what's
you
nervous.
feel like euphoria
Yeah.
is getting a little bit stronger, it makes you a little more nervous.
Totally. And you see it here. You see like Goldman's forecasts are pretty good. Yardenny's pretty good. I know you're coming up on Tom Lee. He's pretty good. I looked at the American Association of Individual Investors. It's the lowest bearish number they've had in years and years.
Well, that's why people are starting to say the only thing to fear is the fact that there's nothing to fear.
100%. And we see that time and again, right? The more bullishness there is in the market, the more uncomfortable I am about the outlook. And I actually asked Patty to send me the rundown from this day last year because I was curious what the strategists were saying. It wasn't as morbid as I thought, but you see when a market's up 26%, everybody's happy again. There's too much euphoria, there's too much expectation. People buy at the top and sell at the bottom, and it's a shame.
Joe doesn't, because I mean that's why he wrote the book, Buy High and Sell Higher. I still think you could be on the offensive in the market and play this broadening out that we're all talking about. The broadening out is real. It's happening. It's built upon the expectation that not only is there rate relief, there's balance sheet relief, in particular for regional banks. And just think about where we were 6 months ago, talking about all these unrealized losses. It's built upon understanding that 6 to 9 months from now, finally the Russell 2000 is going to come out of the earnings recession. So I don't know. I think you're going to get the broadening out. And when I hear some of these price targets, 5,400, it really makes me believe that don't move too far away from the mega caps, because you're not going to 5,400 without the mega caps contributing in some capacity. Maybe they're not going to hit 60 home runs in a year, but for the S&P to go to 5,400, they're going to hit 30. This just implies we're going to have a double-digit percentage increase twice next year. Maybe it's 15, maybe it's 20 at the top end for them to reach the most adventurous targets that have been placed on the market, and that remains to be seen. A lot has to go right still. He can't declare victory yet. He's not putting on the jumpsuit, calling the aircraft carrier, and getting up there and says mission accomplished yet.
I'm just looking at Commodore, fresh Commodore from NYU Stern School. I'm looking at Demoter, right?
I got you. That's
Sorry.
right. The dean evaluation.
The dean evaluation. So I've got his.
Our apologies.
I've got his numbers here from. I'm about to make him a star. About to bless him. So from 1950, and when you look at 91, 99, nothing's dissimilar from now. Because you've got such technology innovation, and you had actually higher rates. The 3-month T-bill was just eyeballing it, was around 3 to 5%. Yet you have 6 periods during the end where the market was up 20 to plus 30% during that period of time. Successive years, there was some interruption, 94 ISIS, a rough year for everybody for election reasons, so the market was flat. But other than that, my point is, there's precedent. So past could be prologue. I'm not the most bullish guy in the show, as we all know, but I constantly wonder where I can be wrong. And where I can be wrong is that the market has another great year.
Well, maybe it's assuming that the AI run can't continue when in fact it might be just getting started.
Right. Well,
that's the argument.
Right. So look, I said it yesterday. I got some pushback in emails that AI is not new. AI has been around for years and years. Amazon, they've used AI forever. When you buy when they see something that's getting a lot of popularity in their site, that's hitting their numbers.
Yeah, but that's
And
a
then
different kind of AI
it is.
component. Now we're ripping the curtain back.
Right, that's not
This is
generative
AI.
AI.
Right. This is completely different.
Well, in terms of productivity and so many other things,
Right.
that this has the potential to unlock.
Right, and I do believe this is the next industrial revolution, like 5G was. It didn't get as much, hoopla as this is. So I do believe it's there, but it's also expensive to produce AI. So there are a few players. So I'm not interested in picking next AI technology. I'm not interested in buying, buying companies that are 100 billion in the private markets with a few dollars a
Well,
check.
maybe you're interested in buying an Amazon, which all of a sudden is in favor from the notes that I read today. There's like 3 or 4 different notes saying this is the way. Now
I
to
would
play.
like to add to Amazon. I'll tell you why. Not for AI, but Meg gets all the headlines for efficiency. When you take a look at what Jassy has done, that's driven efficiency further than Meta. Not only has he cut heads, right? He's cut back on logistics spending. If you take a look at Prime Video, right? He's cut back on production. Their video offering is really punk relative to all the others. And now they're going to charge ads on more of it. They've already been charging ads on others. So, and then you've got cloud. If you want to play in AI, play in the cloud where the compute power you're going to use much, much greater and the tools you're going to need. So to me, Amazon is the perfect. I'd like to buy it cheaper. May not be able to. I do own it. I just don't own enough of it.
And Meta hits its 52-week high today. There's optimism around that. Top digital idea from Wedbush for 2024 internet.
Yeah, and I'm more comfortable with Meta because I think there's higher barriers to entry and less competition coming their way. But just backing up on Amazon, here's something for all of the mega caps. It's making me really nervous. Reading over the weekend, right? And I'm reading an article about how Temu and Shine each did $20 billion directly out of Amazon. And the article is saying basically Amazon created its own demise by creating its own model for competition. Then I was reading something this morning saying BYD actually produced more electric vehicles than Tesla. And we've heard all year all these big players
The
are coming.
marketplace side of Amazon is not the growth engine.
No, but
That's
the point
why people are picking it as one of their top plays relative to AI and what AWS
But here's my
is
point,
going to be.
is that these Mag 7 have held the spotlight for so long, and I think it's a little harder to compete with the community that a Meta has created, right? It can't just take your AWS business and go somewhere else. Sorry, you can't just take your Meta business and go somewhere else, but you can with AWS, or just buy a different electric car, or just use a different AI chip.
Meta's up
Meta's
20% this year.
Meta's stickier. So that one I'm comfortable standing behind. We know we've trimmed it because it's gotten a little more expensive. It's harder to think that with that multiple and still like 20% earnings and revenue growth ahead. So it's just harder to justify significant growth. But I'll tell you, for the mega caps, competition is coming their way, and I think we're going to see an increased drumbeat on that theme in 2024.
The e-commerce story is not done. It's only 25% of all commerce, all retail globally. It's far from done. Like cloud is only 25% penetrated.
Oh, I'm not suggesting that it's done. I'm just saying that if you're buying Amazon, I don't necessarily think you're buying it because of the marketplace and e-commerce business. You're buying it for the growth engine that exists elsewhere.
All right, looking good. The market's pushing higher. All right, I'm eating lunch. I'm just going to be off mic. I don't want to be chomping in your ear. It's very rude.
Yeah, but I mean, when you're the 700-800 pound gorillas in the room, who's really coming
And
at
some
you?
of those have higher barriers to entry. I think Meta has higher barriers to entry. Like, I'm going to get beat up on this. I know by who, but one day there are going to be others who make chips to compete with NVIDIA. And by the way, even NVIDIA's high end chips,
There is
not
also I have an AMD in
right,
the
and
other car.
not everybody's going to need it. And people are going to come for the AWS cloud business, and those can be corroded away. Those margins can be corroded away.
You also take costs, such as, costs you have to put barriers.
Yeah, but there's like, Microsoft can compete there. Others can compete. They're going to cannibalize each other's margins.
25% penetration is good enough in that theory. Even if you have money others are coming for, you got to sell. So I should sell Microsoft, I should sell Meta, I should sell Alphabet, I should sell Amazon.
No. But you probably shouldn't expect them to lead performance over the next decade. I think people have forgotten. If you look at, so cool actually. Look at the chart of Microsoft starting in 2001. And what you see is there's
Sounds like somebody who only owns one of the mega caps.
okay, but as I've said all year, you do not need to own a mega cap to have very, very good performance. And there's plenty of things in our discipline growth strategy. You're in it. Actually,
All right, I'm eating lunch. I'm off mic. I just don't want to chomp in your ear. All right, so I'm not anywhere but here. I'm here, guys. I'm just eating lunch.
All right, welcome back. Dividend stocks largely underperforming the broader market this year. However, our next guest believes the group is set for a bounce back in 2024. Joining us now, Post 9, Matt Powers of the Powers Advisory Group. Welcome. Good to have you. Thank you for having me, Scott, on our show. Good. So you run a dividend strategy. That's sort of your core strategy. Explain.
Yeah, so core strategies, dividend focused, primarily current yield, dividend growth, sector specific. So, a decade or so, I've ran the firm, and this has been our core strategy.
So not just dividend payers, dividend growers.
Yeah, that as well. Yeah,
Yeah. Jenny, this is
that's her space. I know.
I don't know. It's a wheelhouse, which is why we're so happy to have you on today when Jenny's on.
It's fun. And when we were talking before the show, and I was like, oh, this is why it's also fun to be on with Kevin Simpson, because Matt and Kevin are really focused on dividend growth. I'm really focused on dividend income, where the portfolio objective is to have a 5% or better dividend yield. And so, well, kind of like the fundamental foundation of our research is the same, then we're looking for two different things. So where you're looking for has the dividend, been in place for a really long time, has it grown it for a really long time. I'm looking more to say like, is it a 5% or better dividend yield, and how sustainable is that? But we're both looking for, is it a mature company that can support that, cover that, grow it into the future?
Are we going to have a better year for dividend stocks?
I think so. I think the pendulum's swinging, obviously, with potential rate cuts going into next year. It's kind of difficult to come on and talk about, hey, let's buy a dividend stock right now. Just have the year we were talking about this, the year we had in 2023 with the 7. I know you guys talk about it all the time, Magnificent 7. We feel like moving forward, it's the time to start buying dividend stocks and giving it a look.
Joe, now what's the growth rate that you look at, and what's the variability?
So I'll give you a specific example. This is one we like a lot. PNC Financial. So their 10-year dividend growth rate is 14% a year, meaning that you bought this stock 10 years ago, $1.75. So for an annual dividend, now it's over $5 a dividend. So 14% is awfully high. Usually 5% or higher. On a 10-year basis, yeah.
Okay. Healthcare. I've read some notes lately that suggest, I think Barron's even had one today, suggesting that healthcare is due for a bounce. Even in general election years, healthcare stocks typically don't do well. You get a lot of rhetoric from both candidates about what they're going to do to drug prices, blah, blah, blah. But you like Medtronic.
Yep.
So that med device space, why?
Yep. Kind of a left turn. So not pharma. this year it's kind of turned just recently on the price side. That would be our pick in that space. Jenny, you want to opine on that? Because you do own that.
We own that actually surprisingly in our disciplined growth strategy. Like the people with the perfect thing, high free cash flow yield. So it's interesting. When did you buy Medtronic? Have you owned that for a long time or a short time?
We've been buying it continuously, so it's not one single point. But
And what I love about it right now is the reason it's down this year, what the reason it's had a tough time, and the reason the yield's particularly juicy, where it actually could work for either the disciplined growth strategy or the equity income, is because when the GLP-1 drugs came out, right, and people started losing weight, everyone freaked out and was like, oh, geez, now they're going to not need new hips and new knees. But that ship sailed. There's like 30 years of damage to bodies that carry too much weight. And so there's actually like a real misconception on how long it's going to take before new hips and new knees are needed. So great opportunity.
So when you take a look at that, so despite the dependable dividend growth, I'm just looking at the chart. The chart's lower than where it was in 2016.
yeah, that's the part.
So it had a great year in 21, but overall, I mean, when I think about stocks and what they've done over the last 7, 8 years without dividends, without dividend growth. So why do you like this strategy?
So that's the difficult thing, and it's almost, I don't want to say contrarian, but we buy the companies for the dividend and the yield to collect the income over time and compound. The problem being,
When only pay taxes.
how do you compound?
You're compound, you're paying taxes on dividends.
Right.
So immediately you're compounding on a lower
Their net, right? Yeah, and it's, it depends. Obviously, it depends on what type of, as we advise clients, what type of account the tax status of the account is too. So their clients inside of their retirement accounts, their IRAs or whatever, that's totally different. So
You like utilities too, which have been, at times this year, a real hot button sector for, these dramatic losses that we saw in the space. As yields obviously went way up, utilities became much less attractive. And you saw a stretch of, my gosh, I think it was 11, 12, 13 straight days where utilities were in the garbage can. You like AEP, American Electric Power.
So, and Jenny, I don't know if you agree on this, but utilities in general, obviously the worst performing sector of the year. You look at them, you can almost throw a dart and pick one. There's so many that are just, their valuations have obviously come down. But AEP, we picked it mainly because again, we're talking dividends mainly for the dividend. And so, they're 14 years of straight dividend growth, and they increased about 5% a year on average over the past 10 years. So it's just one of many that you can pick in the utility area. And again, kind of the expectation of rates coming down, the cuts that potentially are going to happen next year. Utilities are clearly an obvious sector that you should be looking at. Jay, real quick.
I think I've actually mostly been out of utilities and looking at them to re-enter because for a while there, the valuations got way too pushed up when there was a yield chase. And so right about now is when you can start to look at them again. I'm not sure I'm quite ready to go back in.
Matt, I appreciate you being here.
Yeah, thank you very much.
Thank you. Overnight post night coming up. The Fed set the table for rate cuts sometime next year. We're taking a look at which sectors tend to outperform the best and worst when those cuts begin. Halftime's back after this. or in a position of weakness in response to an economic downturn or recession in the last year. Now, the S&P 500 up about 28% on a year-to-date basis. That's also kind of the inflation swoop where they've been on average on a forward-looking basis over the last 5 years. Now, going back to 2000, Brian Dietrich and the strategists over at Carson Group took a look at the rate cutting cycles for the Fed since the year 2000. And if you factor this idea that current futures markets are pricing in a 68% chance of the first Fed rate cut coming in March, with almost a 100% chance of it coming later on in the year as well.
All right. So the market's still chopping around.
It has been in the past from the position of weakness. So if you take a look at the cyclical sectors that fall the most in response to Fed rate cutting cycles, it's been energy, financials, and technology, all down north of 20% on average during those rate cutting cycles. Now, if you take a look at the outperformers, they're still down, but just not as much. Consumer discretionary down about 12%, consumer staples down 9%, and healthcare down about 3%. So generally more defensive sectors and maybe one more retail-oriented kind of cyclical one. But overall, Scott, it all depends on whether or not this is an economic downturn in the works or whether or not this bull market can keep going. But keep those eyes on those sectors.
Yeah, that's why I almost put an asterisk by all of these because you just don't know to what degree they can or they have to with cutting rates. Dom, thank you. Dom, two up next call today. The one buy on a big bank is up more than 10% this month alone. Steve Weiss in the stock. We'll debate it next.
Okay. So markets are just chopping around, not giving any kind of direction. You know that we look for direction. RVOL up and to the right or down and to the right. Flat VWAP's not giving you much. I'm sorry, VWAP up and to the right or down and to the right, with flat VWAP not giving you much in the way of momentum.
Yeah, it was pretty interesting. Some of the ones you chose to single out there as a winner was good reminder that even though it was super tech dominated, some of the other key themes really played a big role, including housing as well, which just was unstoppable again. A few sector-specific and stock-specific winners in the mix, but generally, the downside was just companies that misfired, with the exception of being that solar trade to the whole got bludgeon. Everything else was kind of stock specific, like the Stay Ladder thing, misfires, falling behind competition. A bit refreshing though that the market.
Okay, S&P, just a flat VWAP chopping around. No direction. Okay, remember we're thinking that we're going to peak at some point. Is it today, tomorrow? Is it next week? I don't have any idea. But right now we're just a flat VWAP, chopping around, not much to do. Expecting price action to stay between the lows and the highs where we are currently.
much more reasonable, and you understand the theory behind why you do something long term like this. So a long dated stock replacement strategy that you can do shorter, you can always move it up. You could extend duration of this trade down the roll every week if you want. But if you just wanted to do it 10 or 11 times, this is one way to do it. You buy a year out. It doesn't, the eyeball test was just trust the net. If you did the 159 strike, it's $2. $2 times 10, that's 20.
And that's, those are only adjustments on a month-to-month basis.
Yes.
You have the ability to roll short options on a week-to-week basis with the weekly
As
options.
often as you like.
Right.
And then if it were to roll for 160, you would roll that trade out before, but remember, you have profit. Right? It just like goes for
And once again, we're going to bounce.
this is a strategy where you're spending a fraction of the price of the stock.
Anticipating this is what it's going to be like into year end. Nvidia, Bitcoin, Enphase, a little fade today. Excuse me. XBI Biotech's doing well. Tesla, Meta, flat VWAP, grinding higher on the daily.
You know, I think Steve said something really important, which is for these banks who buy the CEOs, and moving ahead is extraordinary. I actually saw him last month, this month even, at the Goldman Sachs Financial Services Conference, and you're just struck by what an incredible leader he is. They're doing things like taking market share in investment banking, capital markets, but here's the thing. I don't think you need a catalyst for these guys. They're trading at like under 10 times earnings. They're producing significant cash flow. You don't always need a catalyst for the stock to do well. Sometimes it does so well. Not always. Not always.
Well, the argument for these stocks had always been, well, there's so many times below book, and it's not stimulating anything.
How about the fact that they're trading at 9 times and just simply the net present value of their future cash flows is valuable today? And maybe people just wake up, especially as there's limited growth, limited upside for the bigger guys to have more interest. Maybe they just need to keep producing earnings.
All right, coming up, the semis have been red hot this year. We're going to trade that, debate it. If the trade's overbought or not, we'll do it next.
All right. So I hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's lunch. Market's kind of sideways today. It's the 27th. A reminder, I won't be here on Friday, so I'll be here all day tomorrow. And I'll be in and out of the trading room on Friday. I'll have my co-pilot monitoring the chat room. My son, my daughter will be with us. We'll be going down to Jacksonville for a couple of days to visit with my mom and sister. So I won't be here Friday. I'm sure you understand. I very seldom take days off. So it'll be a slow day anyway, most likely, given previous Fridays before the New Year's holiday. Many people took off this week too. You can see the volume is hardly moving the markets today. Flat VWAP, no momentum in the S&P. The FANG stocks, some moved up earlier in the morning, faded. Now Apple's starting to move. So if Apple gets going, that would be good. Apple below the 21-day, I believe. Last time I looked, was testing the 21-day. We're watching for buyers, bidders to come in, catch the shorts, make them cover. Okay, here's Apple trying to put in a hammer and a reversal into next week. Amazon, sideways. Meta. Okay, Doji spending top but grinding higher. Have a credit spread on Meta, Nvidia, Tesla, and a vertical on Apple. A credit spread and a vertical on IWM, which continues to please the bulls. Moving higher.
Chip sector surged more than 70% this year. A number of names trading near 52-week highs. You've seen the first couple of closes now set up into 2024. So we're having the best year in 20 since 2003 for the SMH.
I own the SMH because we're allowed to trade ETFs. So I think that's actually a possibility. But NVIDIA is cheap and at the center, and I'm going to start with NVIDIA because it's at the center of just the beginning of this AI boom. This is according to the bulls. But UBS technical analysts argue the quote unprecedented market concentration of the Magnificent Seven is an end cycle phenomenon and not the start of a new super boom. I know you guys briefly talked about that earlier. They are quote bearish mega cap technology and would short Nvidia, where they see the risk of 20 to 30% correction in the first half of next year. Switching to Micron, a name that often comes up given their high bandwidth memory that's used for AI systems. DigiTimes today is reporting that Nvidia is actually prepaying Micron to get its hands on the memory chips for fear of a shortage. Reached out to Nvidia, they declined to comment, but that demand right there has analysts also really bullish on the name, like JP Morgan, Goldman Sachs, reiterating buy ratings. And then lastly, sentiment on Qualcomm is less enthusiastic. The stock is up, 32% year to date. The company's Qualcomm smartphone market
Excuse me.
but Micron Morgan Stanley is downgrading the stock to equal a pointing specifically, just one of the points, the third point on your screen, to Huawei's return to the Chinese market, which is going to be a major headwind for Qualcomm. So there's still mixed sentiment for chips in general going into 2024. NVIDIA, yes, commentary, but a lot of the notes are looking for these under the radar plays. Broadcom's still up there. Micron seems to be dominating as well.
You have a lot of these names. Sure do. How does your thought process work now, given what we said was the best year in 20 for this space? When you own, I don't know, it seems like at least 10 names on my list for you. Many of them at 52-week highs, some of them at all-time highs. Thinking about the report. You mentioned declines of 20 to 30%. I think I mentioned last week NVIDIA's probably about 18% above its 200-day moving average. You go through the list, whether it's Broadcom, Lam Research, they're all 20 to 30% above their 200-day moving average. So technically, they are in need of what I would call a correction. I see it as not only possible, but probable in the first quarter of 2024. Does that mean we kind of move away from holding these positions? I don't think so, because fundamentally, these are still the type of companies that we believe in, and we've seen the turn in the semi cycle. One name I'll mention is onsemi. Onsemi is in a different position. Onsemi has actually struggled more recently. It's recovering. I think it's right at its 200-day moving average. Exposed to auto, right? Yes, exposed to auto, and that's the reason for the struggles that it's had. So that's one name you could look at, but I think the report is spot on.
Jenny, Intel, Skyworks, Teradyne, real quick.
Similar, right? Look at each one separately, just like Joe highlighted. You can look at Skyworks that hasn't participated as much, trading pretty cheap 18 times, decent earnings growth ahead.
All right, Christina, thank you. Christina Partsinevelos, owner of the SMH. Final trades are next.
All right, folks, just sitting here watching, waiting for the markets to do something. Flat VWAP, no momentum. All right, Microsoft not following through. These issues with AI have to get figured out. Hold on a second. Let me see who this is. Okay. Sorry, I was muted there. Market's just moving sideways, not doing much. All right, looks like a higher low printing right here on the S&P. Looks like we're going to go, folks. Watch the S&P here. Market look ready. Markets look ready. All right, watching the S&P. All the FANG stocks, for the most part, are making higher lows, so this could turn. Watch Apple and Microsoft; those two are very important on the weight, anyway. All right, we're just flagging here, not going anywhere. I'm just looking through stocks, looking for some possibilities. I'm not expecting a whole lot given end of the year with very little volume. At this point in the day, you would think we'd have twice as many block trades that have come across. Right now, we have about 18 each. Usually, we'd have twice or three times that much in block volume. That said, we do have 4 to 1 up volume on the NASDAQ and 1.3 on the NYSE. Up volume leading, looking for a follow through. Okay, we're starting to push higher now. Apple turning up as well. Apple. All right, continuation. Okay, Apple's still pushing here. Apple looking really strong. Apple, nice hammer on the daily. Okay, where is the call walls on Apple? At 197.50 rings a bell. Let's see. All right. Apple 197.50 and 200. All right, so we got a ways to go to get to 197.50. 195, we're pushing back through support levels. All right, so we're pushing higher. What time is it? 1:47. Thank you, Mondo. All right, Apple continues climbing here. We just need the indices to continue higher too. As a product of these larger tech ETFs that have a heavy weighting, we'd like to see these moving higher. Right now, we got 4-to-1 up volume on the the Nasdaq.
of your benefits inside every weekday, and we still have a Schwab network. Welcome to Schwab Network. Broadcasting 24/7 from our studios in Chicago. Up-to-the-minute market insights. No politics, analysis ahead of big decisions. 24/7, available anytime, anywhere, on any device. Schwab Network, empowering every investor, getting every
All right, SPY coming back in a little bit. Apple still going.
Low tick alert -800. Extreme low tick alert.
Yeah.
Find the next trend. There's no fear of missing out on next trend investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. About coffee, I'm Jimmy Ford. Join us for next trend investing.
1 p.m. Eastern.
Okay, just like that, they're taking it lower back into the range. So it feels like distribution up here.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab.
Okay, let's look at the S&P 500. We're just chopping around. Okay, above and below VWAP. Okay, so keeping this choppy. Back down to 47.75 resistance or support now.
Low tick alert -800.
All right, man. Pretty nice drop here on the S&P, just like that. Okay, dropping off here pretty quickly. It's like there's some news or something. All right, it's 2 o'clock on the East Coast. 2 o'clock on the East Coast. You can see how this flat VWAP situation, we're looking for price to stay above or below. Just chop around. The dark purple line looks purple is VWAP. We're looking for price to stay along VWAP. When it gets down to the lows, look for a bounce back towards VWAP.
Extreme low, tick alert. Low, tick alert, -800.
All right, nice little bounce. All right, at the lower end of this range. So when I'm looking at flat VWAP, basically I'm looking for this range to hold on a flat VWAP. It'll show up as a doji on the daily. Okay, you can see we're at the lower end of this range for the day. VWAP is in the middle, more or less. So let me take this down to the bottom. So you can see VWAP is right here in the middle, and we're just expecting price to stay in this range back and forth. Okay, if you look at the daily on the S&P, you can see what that turns out as a doji. All right, so does that scare you? A doji pattern like that? 921 day, have the weight of our thoughts that this trend will continue. Maybe we go down and test the 9 EMA, 3750, 3730. That's possible. But for the most part, this range, this VWAP, will more than likely create a doji. Prices will stay within a range. Okay, Meta. All right, we're getting a nice little bounce in AMD, Meta. Watch AMD. All right, nice little bounce. So have you been taken out by a choppy sideways doji on the daily, choppy price action? You can alleviate that in your trading if you just pay attention to VWAP. If VWAP is up and to the right, then you've got a better setup. Let's take a look at Tesla for an example. Tesla versus SPY. Okay. VWAP up and to the right in the morning and then goes flat. So it's going nowhere right now, but it's moved higher. Let's see what Apple looks like. Apple, you know that Apple moved back through VWAP after dipping. VWAP is now starting to tilt up and to the right. You can see VWAP is turning, obviously. It's lagging price, but once it got above VWAP over here at around 11 o'clock, we just start to follow through. Looking for higher highs and higher lows at this point. Focus on VWAP. It'll help you with your trading a lot. If it's upward sloping, you want to be bullish. Downward sloping, you want to be bearish. If it's flat, you want to do what Brother Bill did this morning and trade a iron condor on SPY instead. That could all change. They could start selling like crazy going into the end of the month, end of the year. But for now, looks like prices starting to bounce.
Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Put your trades into focus on thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Moderna. Let's see what Moderna looks like. Moderna, mRNA.
Download the Schwab Network app and join us to follow all of our friends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. All right, so we're still fading, looking for prices to move higher into tomorrow and Friday. Just a note, Friday I'll be out. I'll take a Friday vacation day. I'm going to go down and visit my sister and my mother in Jacksonville for a day. Stay there Friday, Saturday, come back on Sunday. AMD with a bounce. Watch AMD here. Okay, so we're still hanging out here at the lows of the day.
All right, nice little bounce coming in now. Shorts covering. Okay, we'll stay within this narrow range with VWAP flat. Look for prices to move back towards VWAP now, maybe even the high of the day. Wouldn't be surprising to see a move towards 4,800 before Friday's close. Oh, man, this market is so forgiving.
Yeah, it really did. They had a pretty poorly digested Q3 report back here in the very beginning of November 1, and the chart broke down significantly. And you can see this when we pull up the daily. What's really interesting, though, is that traders who thought this might be their buying opportunity stepped in and did very well. We're 60 plus or 68%, excuse me, off of that new 52-week low we made at 1469 on November 2. So this is an interesting move because we have rallied so well, and the bullish traders feeling good about things for the last 3 2 months here. But we are at an interesting area of use fun here, but confluence because we've got a lot of things coming together at this price. We have a downtrend line, we have former support, now resistance. So you have a lot happening at this price ledge around 26 or so, and it gives bearish traders perhaps a better risk versus reward opportunity in the short term. But if this does manage to trade above that downtrend line we've drawn in here, dating back to the highs at 41 in the summer, well then now you've got the start of something bigger. And for a lot of traders, they're still going to want to see a recapture of the 200-day moving average. That's up there around 28 bucks. So there's still some work to go on the long side or the bullish side here. However, if we shift over to the long-term chart, I think you'll see what's pretty intriguing on this one to a lot of traders when we saw it make this 52-week low. And that is that we've been below $16 or to $16 in the past. And we've tested this level a number of times. And that provided an area for longer run traders who may have been prepared to say, hey, this is an excellent opportunity. And as you can see, we got down to that
High tickler plus 800.
Investor checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. No monthly service fees or account limits, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checkout and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking. The checking account built for investors.
It's time to look forward,
Find the next trend.
from every click to every hit.
There's no fear of missing out on next year's trend.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. Think about coffee, I'm Jenny Ford. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Stream Live on the Schwab Network. I'm Oliver Wayne.
High tickler plus 800.
Yeah, look, I think it's why this is beautiful. I mean, if you think about China, the shadow banking, some supply chain, wallet, sure, but it can really smell like green. I mean, if you look at the actual numbers, an iPhone now, like, for service, events, I think that's the value is 15. You're re-rating an Apple, which is why we put it in 2024, is a $4 trillion market.
So what number are we looking at on that stock when you say 4 trillion? What does that mean per share?
Yeah, I think the best way is to sort of use
All right, so we're back in the middle of this range. SPY, right back to the middle, flat VWAP.
this hurdle, and it was big bad news, right? It was the shadow was blurred out. So you had kind of more that. I still think you're not far towards it. I'm not saying that it's champagne and strawberry, but we're seeing growth at a time, and I think you're going to start to maybe soften some of that tension, and that's a positive. But on the flip side, other areas, there's still lots of small business, jobs for the media talked about. I think they made the right move. Like you, yeah, that's wrong. And now, especially for a tax year, now look, they got this salon cake with a price and worried about margin. So that's going to be the lower end stock. We'll stay up late. But units going to close 2.1 times. And like you talked about before, they're doubling down on these deals. Others are struggling to get back. And there's huge opportunity for them to decide to start manufacturing some of their use. This is for the question of process. All these factors come up. BYD is so, they just had two different variants. It's not their actual producing that Detroit. He's not supposed to. I don't know. I mean, we're still talking for this second in the like, if we know you're seeing and well, even if you chop that by 20%, this is just starting the auto segment. Look, I mean, they dropped that post that Sean Penn did after it happened in India as well. But it just comes down to like everything they let that out, and ultimately they do these kinds of sensitive. And the bull market started. I mean, we see kind of about 25% now 24. I am
Mara just going ballistic here.
the cap it's the biggest tech transformation since starting in 1995. And that's why it matters. If you look at those eight big hybrids, right? They've come out, bull market's going to support.
Build an experience tailor-made for trader minds. Go deeper with InfoSweat, award-winning trading platforms. Unlock support from the Schwab Trade Desk, a team of passionate traders who live and breathe trading. Sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly. Everything, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device. Go for it. Welcome to Morning Trade Live on the Schwab.
Nio looking for. There goes Mara again. Holy smokes.
Available anytime, anywhere on any device for free. Schwab Network. Let's start the morning with a full dose of markets, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere on any device for free. And available on all your favorite streaming services. Visit with Ben Lichtenstein every weekday, 8 a.m. Eastern, Schwab Network.
Intel still going. Nio, you guys get a Nio, Neo Nio? Okay, buyers are showing up on Nio. All right, so we're just chopping around. Okay. So we're putting in a lower high on Apple. All right. Looks like people taking some profits off. All right. We're fading again. All right. All right. Back to the lower part of the range again. It's a doji day. I mean, look at the daily. Look at the daily on the S&P and tell me this is scary. Now, I'm not trying to be glib or anything, but I mean, we're talking a very narrow range. All right, so it doesn't look very scary to me, even though intraday price action would have you think that things are a lot worse. Just pull this together. It doesn't look as scary, these price swings. Okay. All right, looking good. Looking for the bounce. All right, it's almost 3 o'clock on the East Coast. 3 o'clock on the East Coast coming in. 13 minutes to go. Just a reminder, I'll be off on Friday. I'll leave you in good hands. I'll be checking during the trading day. It's just that I won't be broadcasting. I won't be chatting away. On Friday, I'm going to go down and visit my sister and my mother, who is visiting my sister down in Jacksonville. So we'll be down there for 2 days with the kids, and then we'll come back on Sunday for the New Year holiday. Okay, looking for a bounce back into the middle of the range.
the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. The Delta Bell and Beyond. Available anytime, anywhere, on any device for free. Schwab Network. Missed out on today's market deadlines? Get caught up and catch the rest at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Okay, so we're in the lower half of the range right now. All right, we're staying below VWAP at this point. All right, Tesla flat VWAP just below VWAP now. Meta trailing off. Meta trailing off a little bit. All right, stock. It just looks like people are starting to take some profits off into year end. That's what it looks like to me. XBI, Doji at the highs. Lots of Dojis, lots of flat VWAP action.
Certainly the U.S. oil production, they have gotten a tremendous amount of kind of more with less. They've been able to, really generate a lot of incremental production without spending a ton on new capex. And I think what that suggests is some improvement in technology that is allowing them to do that and still plow a lot of money into dividends and buybacks, what have you. I think the second thing that jumps out at me, and this is almost to drive the point, is that at least towards the end of the year, OPEC Plus has seemingly less agreement going forward than they have in the past. What I would point to is their decision.
All right, we're continuing to test the lows. Where it's 4750 on S&P. 4750. We keep banging up against 4775.
I think that Exxon and Chevron stand out. So you take a look at PEs or internal dividends, 3.5, almost 4. I think we like those two companies obviously fragmented, but I think if you look at the fact Exxon is the fourth largest producer globally. This is these are dominant players that do very well as you trade for
Yeah, and it's sort of pushed on us in that finishing line, right, for 2024?
So Eaton's an industrial company, but it does have overlap into the energy markets. But I would say that if you're thinking about where to position yourself in energy, in a view that oil prices will probably do well in 24 relative to 23.
All right, let's see if we run back up into price action.
Ronnie Penn of Penn Capital Management, with CFRA. Always great to see you all year long, and I'll see you into 2024. Looking forward to those discussions. Thank you.
Oh boy. All right, we're bouncing back up into price action now.
All things here different from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
There's no place like the New York Stock Exchange. We've got you covered, the biggest stocks, the biggest trends, all the market news. The watch list with me, Nicole Cavalini, 2 p.m. Eastern on Schwab Network.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes. On Morning Trade Live on the Schwab Network. Weekdays at 9 a.m.
Kickstart your morning with a full dose of science.
All right, moving back towards VWAP. Mara heading back to the highs. It dipped a little bit. Meta's starting to bounce. A lot of shorts covering.
Available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network. Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Wynn.
It's time to look forward. Find the next trend. From every click to every tick.
With no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. T-Bounce Coffee, I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Only on the Schwab Network.
All right.
you're special. You got a lot to talk about. We're ending 2023 with a pretty incredible event, which is the stocks pushing up to all-time records. Some indexes already there, some futures already there. And the S&P 500 benchmark close to the line with a couple weeks left on the calendar. And right up next on the calendar are supposed Fed cuts beginning in March.
All right, moving back towards VWAP, pretty much what we're expecting. Flat VWAP, price action in an oscillating pattern above and below. In this case, gravitating. A lot of people see this pattern and will trade it accordingly. Okay. Let's see what Mara is doing. Mara. All right, consolidating at the highs. Mara. Mara looks like it's going to break out again. Damn. All right, let's see what Tesla is up to. Tesla, I see that popping up on my radar. Okay, back below VWAP. All right. NVIDIA flat. All right, so just hanging out near the highs. IWM been showing strength right at VWAP again. AMD grinding higher. AMD pulling away from VWAP. HUT.
Oh, absolutely, yeah. The volatility in the bond market is that way, you know, that you blink and you miss a decent year here, but don't worry, there'll be another year next week as well that you can either capture. So where should we like wait our discussion then? Because if we go back in the first quarter, you know, the expectations that we were going to head off an economic cliff, you know, some would argue that's why we're now getting rate cuts priced in, but that never really happened, and we're pricing it in anyway. So which part of the year is really the most determining factor when we're talking about next year? Yeah, you're right. There is a bit of deja vu when it comes to the economic forecasting in the bond, at least the bond market outlook. Yeah, where have we seen this before?
ARM.
A year ago, when everybody put out their 2023 forecast.
ARM Holdings. Looking for that to break higher too. ARM Holdings. Just above flat VWAP, putting in higher lows. ABCD pattern, ARM. Depends on when that growth kicks in. The Fed right now, rather I should say Atlanta Fed is pushing up your expectations to the high twos. You had that big nice juicy print for Q3 GDP. When do you suspect some of these forces might start to support inflation a little bit more strongly? I think they are right now because, you know, if you look at the inflation data, as we've seen, it bottomed in June. I know on a year-over-year basis, we hit 3.0% in June. For November, we're at 3.1%. That should probably uptick for the December number, which will be reported in the middle of January. So it's looking like the inflation rate might be bottoming. We're at around 4%. Okay, looking good.
But I'm not so sure that we're going to make that next step into good news unless we get a hard landing, an actual slowdown in the economy that creates unemployment, creates earnings losses, and creates misery. But short of that, even with the soft landing, I think that the story is going to remain that inflation is going to stay sticky. And I know that that is a call that I've had now, I've had this call for years, but I also know it's a call that is not been working for the last 6 months or so. But as I look at the data, I don't see a reason to say, no, something has changed in the last 2 months to suggest that the economy is really in a different trajectory than where it was in the early part of the fall. I like the transparency on the views. I will add by saying that again, this year There, and I also think what might be really coming to the forefront is what Chicago Fed President Austin Goolsbee is really focused on right now. Is he's saying we're going to have to focus back on employment, but I don't think it's going to be the way he thinks it's going to be. We're going to focus back on employment. We're going to say, man, the employment market is really strong, and wage inflation is going to be, sticky in the 4% range. Remember, if you're getting a 4% raise, it's 4-year 4% inflation. And that's the problem with sticky wages. And I think that that's what we might wind up seeing more in 24 than the opposite. Look, again, I'll also point out.
Okay, S&P 500 back to VWAP. Okay, there's your pattern that you're looking for, sideways with a flat VWAP. Just looking for a range bound action. All right, well, so we're back up above VWAP. Looking for it to move back to the top of the range and just stay inside of here in this tight price action. I'm here. I'm just scanning through stocks. It's not a whole lot to do with a flat VWAP. Back above VWAP, continue to push higher. Market's looking good. All right, Meta continues to push higher. Meta looking good. back to the top of the range. Looks like the S&P as well. Flat BWAP. AMD on the move here. AMD breaking out to the upside. VWAP.
Low tick alert minus 800.
All right, so we're drifting a bit lower. A little profit taking there.
Extreme low tick alert.
AMD still going. AMD looking good.
over time, these are two of the most impactful products we see over time.
All right, looking good. VWAP continuation. AMD looks good. AMD looking really strong. Nice volume compared to yesterday as well. Continuation. Let's see what the weekly looks like. Weekly. Okay, nice consolidation. June through October, and then pow, takes off to the upside. AMD looking good. Looking good on AMD. Okay, AMD looking good. So we'll shift back to S&P, chopping around. All right, so that's that. All right, keep an eye on AMD. AMD looking good. Meta back above VWAP. Meta back above VWAP. Tesla just below VWAP. AMD looking really good. VIX is starting to turn. XBI Biotechs starting to lift. ABCD pattern on XBI, IBB. Okay, let's see what NIO looks like. NIO. Okay, NIO dipped earlier into yesterday's price action. Now we're following the buyers that stepped up at the low of the day, looking for higher highs and higher lows, get back above yesterday's high and follow through into the next few trading days, next couple of weeks. All right, price action looking pretty good. AMD pulling away from VWAP with less than 30 minutes to go, 27 minutes to go for this Wednesday, the 27th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's pretty quiet for a good part of the morning and lunchtime session. Now we're starting to push higher, back above VWAP. Many stocks are taking off to the upside. AMD, Apple, a few others above VWAP and rising. Meta's at the highs after chopping around most of the day with a flat VWAP setup. Looking forward to get back to the highs of the day. Tesla working. It's magic above 260. Would see support there most likely. All right, nice rally back above VWAP, S&P. Tesla trying to get back above VWAP. Up 4.5 on the day. Tesla up 4.5. Off the best levels of the session, but looking for a follow through now that it's above 260. Looking for 270 maybe by the end of the week, if not next week. Okay, AMD continues to pull away from VWAP volume picking up in the last 30 minutes. We've got 20 minutes to go for the closing bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a glorious Wednesday, the 27th. Even though it's been raining and overcast, the sun's starting to come out. Hope everyone had a good day today. Kind of slow, but some stocks did move higher. The FANG stocks, New York FANG index, is hanging in there. S&P is showing a doji on the daily. Qs also showing a doji on the daily, and IWM with a doji at new highs for 2023. Let's see what the Dow Jones looks like. Dow Jones Industrials making new highs. Dow Jones continues to make new highs. The industrials looking very strong. Okay. Dow Industrials looking strong, making new highs for the year. Let's take a look at the components of the Dow Industrials, 30 stocks. Let's sort them by performance today. We can see a little bit of selling, profit taking now. Walmart having a good day. Walmart, nice move on Walmart. Walmart, best performer. All right. Okay. So Dow Industrial is making a new all-time high. Walmart certainly helping out. Walmart. Let's see who else is strong on this one. Industrials. Walmart. Walmart could get to a 169, 170, another 11 points or so. I would say it probably takes another month to get there, but looking pretty good. MACD stochastics rising. Wait for this to reset again. Maybe it runs into the 50-day, flags out, and then follows through. That's what the most likely scenario is. Hit the 50-day, consolidate for a week or so, and then take off to the upside into January. All right, so a little drift lower. We've got 14 minutes to go. 14 minutes to go. A reminder: I won't be here on Friday. You'll be in strong hands for those people that are remaining and trading on Friday, not taking a trip over the weekend. I'm going down to Jacksonville to visit with my sister and my mother so she can see the kids. My mother, she hasn't seen them in a couple of years, so she's really excited about that. I'm excited about heading down that way. So I'll be down in Jacksonville. Wish I could be down there for a few more days to visit with people down there. I don't know what our timing is going to be, but definitely be down in Jacksonville Friday and Saturday. All right, folks, we've got 12 minutes to go. 12 minutes to go. Make sure you're checking your positions. All right, drifting a bit lower, so people will be taking some profits off. Looks like the markets could be consolidating up here at the highs. Let's see, S&P 500 back below VWAP in this range. All right, AMD not stopping. AMD had a little bit of profit taking there. Now it's starting to move again. AMD 2-day move there on AMD looking really good. We got 8 minutes to go. 8 minutes to go. All right, we've got 7 minutes to go. 7 minutes to go. Okay, we got 6 minutes to go. Stocks are starting to see some profit taking in the day. All right, nice little rally into the close. We got 2 minutes to go. 2 minutes to go. Big-
High tick alert plus
Bitcoin going. Biotech's going. Shit. Holy smokes. Look at this market right at the close. VIX dropping off. All right, folks. Got a hard stop. I got to go get some beef and veal and pork. I need to make meatballs. I'll see you guys tomorrow, bright and early. Take care. We'll see you then. Have a good evening. Ciao.